Close. Let's take this webcam off. Change this display capture. Put it to this monitor. Bow. There we go. NQ Gambler, what's good, bro? What's up, gang? How's it going right now? I don't even know. I haven't even looked at it yet. Still getting everything situated, bro. Give me a second. I'm gonna go over some gold. Let me know if my music too loud, chat. Tempted, screw, neat. Let's go. Let's pull up the Discord chat. Announcements. Copy, paste. Let's change this link. Delete. There we go. Let's mute that. Copy, paste, enter, send now. All right, we can close that over there. Seeing the before I keep reminding me again to lean up. All right, so let's see what we got today. This was yesterday's trade. This was a nice solid trade. Ran for about a 1 to 1.8 risk reward. We took partials at a 1 to 1. Price started to reverse, took out this low, and this is where I decided to get out this position. Let's see what else price. Let's see what everything else looks like. I was looking at break and retest sales of here, but this didn't happen to the New York session. I was asleep during this time, so I didn't get this position. But just to see that it did play out, low key boosts my ego. What else do we have? We also looked at buys here on EJ. Didn't quite hold up, as you can see now, where it looked like we're failing to hold this level. So, got no trades here. I was waiting for a pullback up here into on GBP never got the deep enough retracement, but now we're looking like we're getting this break and retest full, which was my second option, but don't really want to take that either. We also called these buys here on NAS 100 yesterday. Didn't take it though because I was already in a position, but we did call these buys at this level. That did end up playing out, which was a nice buy off of this big rejection right over here on NAS 100. I was looking at a break and retest here on NZDUSD in here. We got a pullback, just wasn't steep enough here, and we got another pullback over here, just still didn't quite make it to my level. The sales did play out, but it just didn't give me a entry. GJ waiting for a break and retest down here from yesterday. We got the break, now we're waiting for a retest. Gold still inside this consolidation phase. This is the range I said I didn't want to trade in. I wanted to trade below it or above it. Below it, we could look to target these lows down here. Above it, we could look to target these highs up here. But as far as price is in this range, I don't want to participate. US 30, we did call these buys yesterday. And well, price is still playing around in this area though. We just created a higher high and new higher low. Price looking to see if we can retake these highs up here. But overall, inside the consolidation phase. GA. Price give us a steeper pullback, but now we're breaking back above this level of resistance. See if we can get a closure, a retest, and a continuation to retest these highs over here in the overall bullish market. GU, coming down, look like we want to take this low. And UJ, nothing really. But we're gonna clear all my charts and start all over. So this was yesterday's trade. Make sure we lock this so it doesn't get deleted off the chart because I don't delete my previous positions. And clear the chart, start all over. Based off of how I trade, if you're new or if you're not new, you should know this. But if you are new, I'm going to explain it. I'm a higher time frame directional bias trader. I trade with higher time directional bias with lower time frame entries. So I like to pick my directional bias based off of daily 4 hour and 1 hour. And I like to enter my trades on a 5 minute once price reach my POI. So I'm going to show you how I decide all of that stuff that I just mentioned here. Let's pull a YouTube chat up real quick. All right. Start off on the daily time frame, just to establish a directional bias. I'm asking myself, are we making new highs or new lows on the daily time frame? Here, we're making new highs. How do I know? Because price just took these highs up here, created a new high above these previous highs, looking to the left-hand side with this high, this high, this high, and this high. So we are bullish. I do the same thing on the 4 hour time frame as well. I ask myself, are we making new highs or new lows? As you can see, we're making new highs How do I know? Because price just took this previous high to the right hand side, to the left hand side, making a new high all the way up here. This is just a retracement phase of overall bullish trend. So we have an impulse of retracement and a potential continuation. 4 hour is bullish as well. Let's go to the 1 hour time frame. Are we bullish or bearish? So I want to say we are bullish because we haven't took out a previous higher low, but we are internally structured bearish. How do I know? Because this is our most recent higher low that price never took yet. But inside this overall bullish structure, we do have internal structured lows, as you can see here. So our 1 hour is bearish. As far as buys, being so our daily and 4 hour are both bullish, I don't want to buy until this 1 hour time frame goes bullish as well on this internal structure. And that doesn't happen until price re-breaks the previous high that created that low. But this is my current low in this internal structure. How do I know that? Because this low broke the previous low to the left hand side. This was the highest point that price reached before creating this low, meaning we are bearish internally until price breaks the highest point before creating that new low, which should be above here. So I do want to take buys, but not while price is in a retracement phase of a 4 hour trend. I'll draw my fib from the lowest point to the highest point of this overall push. You can see we having a rejection off of this fib level. But again, I don't want to buy while the 1 hour is still bearish internally. So what I would want to see is price to reclaim this high over here, give me a break and retest for a continuation back above this level. And then we can look to target this wick fill to the left-hand side right over here from this news week. Or I would rather see price come down from here, take this low, now give me a new lower low, which will make this my new current lower high. If this low gets taken, then we can look to take this position here instead, giving me a better entry and a better risk reward, being so this is a break and retest of this previous level of support, which is now resistance. So either this, we take this low first, or create an equal low at least, and then take this high. I would look to take this. Or if not, just continue up, we could look to take it up here. That's what I think about Euro USD. What else? So far, we're going to take this off our favorites though, because this does not look like something that's going to happen today, to be honest. And let's continue. Look at AUD USD. This is yesterday's chart. Let's clear it and start it all over. Daily time frame overall bullish. How do I know that? Because this current high up here is higher than our previous high. Looking to the left hand side, let me know that we are making new highs on the daily time frame. Then we drop down to the 4 hour time frame and do the same exact thing. Are we making new highs and new lows? We're making new lows. How do I know? Because we made a new high to the left hand side here, where price started to push up and break previous highs. This was the lowest point that price made before creating that new high, meaning we should be bullish as long as we stay above this high. This low. As you can see, price did end up taking this low, meaning we are now going from bullish structure to bearish. So this was a market structure shift on specifically the 4 hour time frame. If I am talking too fast in the chat, let me know and I will try to slow down. So daily is bullish, 4 hour is bearish. Look on the 1 hour time frame. 1 hour time frame is bearish as well. How do I know? We're making clear lower lows and lower highs here, as you can see. So if our 4 hours bearish and our 1 hour bearish, I would want to take sells more than I want to take buys because I have more time frame telling me to sell rather than telling me to buy. So now it's about finding an area where I want to actually take them sells at. So find our levels. We start off at our current low, which will be right over here. Our previous low, which will be this pivot point right over here, and our current lower high right here. That traps price inside this range. Consolidation range here and range here. I would say break and retest of this area to sell, but again, price already did that. So we missed out on that trade. No point in trying to still take a trade inside that area. That price already activated them limits that would have been there. So we can delete this mid level because this is like a minor level. We don't want to trade off minor levels, just a major one. So we can just ignore this minor level and just focus on these two. Now that we see that price is inside this range, we can wait for price to re-break this low, give me to create a new low, wait for a retest and a continuation to the downside. Then if we get these sells, we can look to target these next level of support, which will be right down here, or the next area that price previously rejected off of, being we have a rejection here, impulse up, a rejection here, impulse up. We can anticipate if price comes back into this area for a take profit, we may give another rejection to the upside. What's good, layback? Welcome to the stream, bro. So that's what I think about AU. This setup does look good though. So before we can actually take this setup, we need to see a 1 hour closure below this level. We're gonna put this at our number 1 pair so far. Let's look at Euro JPY, clear my chart, start all over. Daily time frame, ask myself, are we bullish or bearish? We are bullish. How do I know? Because price makes a new high after breaking this previous high to the left hand side. Go to the 4-hour time frame, do the exact same thing. Are we bullish or bearish? We are still bullish. How do I know? Because price made a new high after breaking this high to the left hand side. Go to the 1-hour time frame, do the exact same thing. Are we bullish or bearish? We are bearish. How do I know? Because price made a new high after creating equal highs at this price point up here. Then we took out the low that created those equal highs, or the low point before we created them equal highs right over here, shifting into bearish structure. If our daily is bullish, our 4 hours bullish, and our 1 hour is bearish, I want to buy overall, but I wouldn't want to buy while the 1 hour is coming down. Instead, I would need the 1 hour to shift bullish first before I look to take a buy. I'm asking myself, where does the 1 hour shift bullish? If that's where I want to buy at, that would be at the highest point before making a new low. This was the highest point price made before making a new low. This is our new low. This was the highest point. But in order for me to buy Euro EJ, I need price to come back above this area and then trade it up. Unless price create a lower high and a new low, then we could trade our entry from up here to about down here or so, just depending on if price creates that lower high and makes a new low or an equal low first. But based off of the current price action, this is our pivot point in price where we shift back into bullish structure, specifically on the 1 hour time frame. So we could unbookmark this because this is not something I'm gonna be open to taking today because it's a little bit too far away from current price. Do I buy risk? Do I buy RR at 4.5 right now or wait to see if it drops? I don't know what RR is, bro. But that's a decision you have to make on your own because at the end of the day, you are responsible for your own profit and loss. Let's look at GBP CHF, create a chart, start all over. So far, we only got one good pair for today, which is AU. Rich Tech Robotics. Oh, I keep seeing everybody on that shit on TikTok, to be honest. But I don't know, bro. It's up to you. I don't trade that, so I'm not gonna give you my input on something that I'm not familiar with. It's definitely overly hyped though, to be honest, based off of TikTok. Start off on GBP CHF. Start off on a daily time frame. Let's look at this structure. Ask myself, are we making new lows and new highs? Are we making new lows? How do I know we're making new lows? Because price just took this low to the left hand side with a massive bearish engulfing, creating a new low. But daily is bearish. Going to 4 hour time frame. Are we making new lows and new highs? Answer is still the same, new lows. How do I know? Because price created some relatively equal highs here. This was the lowest point before creating that equal high. This lowest point got taken out where we shifted to bearish structure. Then we see a break, a retracement, and a possible continuation back down to these equal lows, possibly. Our 4 hour is bearish. Our daily is bearish. Let's look at our 1 hour time frame. 1 hour time frame is bearish as well. We have internal structure buys where we have higher highs and higher lows. Then price took out this most recent low that created that new high, shifting back into bearish structure. And now we have massive break rejections all off of the same area where we're struggling to break and close above this area. So we could see some sells coming in around this area, but the only problem is I don't want to sell inside this rejection area. We can look to target these lows down here, but again, this is too much whipsaw. This is choppy. This is barcode price action. Because this is a indecision level, I really don't want to trade here because it's too much randomness. It could wake up and could close and continue. It could wake down, close and continue. Like it's too 50-50 in this area. Instead, I would rather wait for a higher quality setup. Our higher quality setup will be below this overall consolidation range where we have clean candles to the left hand side to trade to fill in the rest of this range where we can look to target these lows all the way down here. Or even these highs right over here. These are next pivot points in price. But based off of this consolidation here, like as you can see where current price is, this is choppy price action. If I look more to the left, we have choppy price action all off this same area. When I took a trade back over here in July on GBP CHF, that was choppy as well for this break and retest. So being still we have choppy in this area previous times, I would anticipate that we're going to stay chopping this area again. So instead, I would rather wait for price to break below that area. So in consolidation, you chill out, not jumping too quick. Yeah, in consolidation, I just put it to the bottom and trade something that looks a lot more clean. This just isn't clean price action, so I don't want to trade that. When I take trades, I like to take trades with clean candles to the left-hand side because I like to fill in the imbalances. So we have an aggressive drop, and then I see we shift direction to bullish. Whatever, we start to make new highs. High time frames align, bullish align as well. I would look to trade this imbalance, meaning look anticipate price to fill some of this range. Same thing here. Like we have clean candles here, whatever. It's not as choppy. You would anticipate that the move down will be just as clean or relatively close to that clean because the previous price action was that way. Same thing here. Clean candles looking up. If you wanted to take sales where the high time frame aligned, you would anticipate that the push down will be just as clean. That way you don't have to be in a trade for a longer period of time. As you can see here, price was choppy in this area. When we came back down, the price action down was choppy. Again here, price action down, a little bit choppy. But then we have clean price action here. Price try to mirror this move to give us a balance off. And we have clean price action drop. So because this area was choppy before, I'm anticipating that this move down will be choppy as well. So I'd rather just not trade that. Or wait for a cleaner setup. Because at the end of the day, trading is a game of probability. I really want to only put my money behind the high probability setups where I have less to worry about. It's too much to worry about in this area. It's too many supply areas in this area. It's too many demand areas in this area. It's too many fair value gaps. It's too many wick rejections. Like it's too much going on. You don't know which ones are going to hold up or which ones are going to fail. So because it creates that 50-50 or that high level of uncertainty, I'd rather just trade something that looks a lot cleaner. And that doesn't happen until price breaks out of its overall consolidation. That's what GBP-CHF. And that's why I have a lot of pairs here listed on my watch list where you see everything to the right. This is everything I trade. The reason why I have a lot of pairs there is because I focus on the quality of the setup and not just any given setup. If a pair is choppy, I just simply won't trade it and focus on something that's a lot more higher quality. Even if it does come down like I anticipated to, I'm not going to have FOMO like, oh, I knew it was going to drop because it'd be over bearish. It's just about probability. And protecting your emotions from seeing yourself going drawdown, then profit, drawdown. Like, look at this barcode price. It's just sideways. See, bullish, bearish, bullish, 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 bearish, bullish, bearish. But this is slow volume candle. I don't want to trade inside the same range. Let's continue. Let's look at NASDAQ. So this was the buy we looked at yesterday, but unfortunately we missed it, even though it did play out and hold off of this wick rejection. Let's give us a new analogy. I mean, not a new analogy, a new analysis. So look for the daily time frame, just like I always do. Ask myself, are we making new highs or new lows? We are making new highs. How do I know? This is all-time highs on NAS 100. Also, we broke these previous highs to the left-hand side where we're creating this new high at now. That's a daily time frame. Looking at the 4-hour time frame, we are making new highs as well. How do I know that? Because this is our previous high to the left-hand side of current price. This is our current high, and this is definitely higher than our previous high. That lets me know we're making new highs on a 4-hour time frame as well. So our daily is making a new high. Our 4 hours just made a new high. Let's look. So I want to buy more than I want to sell just because I have more time frame telling me to buy rather than telling me to sell. Very self-explanatory. Get at the 1 hour time frame, we are bullish as well. How do I know? Because price created a high here. Price gave us a retracement, then made an even higher high up here. Lets me know we're making a new high. Based off of this, high, higher low, higher high. Very simple. So our 1 hour is bullish as well. Now that I know that my 1 hour, 4 hour, and daily are all bullish, I will rather take buys rather than sells. So now I'm just trying to find areas of price that I would actively want to buy it. Just because I know I want to buy don't mean I want to buy right now. I need price to get to a specific area or a strong key level before I take buy. Now you might be wondering, how would I find my key levels? I find my key levels on the 1 hour time frame. I mark off my current high, previous high, and my current high or low. So this is my current high, meaning the current highest point in price that hasn't been broken yet, which will be this high up here. My previous high will be the previous high that just got broken, which will be this pivot point right here over here. My current high or low, meaning the most recent, the lowest point in price before creating a new high. And this is my new high. This is the lowest point that happened before creating this new high. I mark up this level as well. Hold on. Let me call this nigga on Discord, bro, because this nigga calling my phone. Where this nigga at? Where this nigga at? Where this nigga at? Where this nigga at? All right. So because this previous high has already failed with this retracement, I don't need this on my chart anymore. I know I'm not trading off of that because it already failed. So let's just clear it to make the range a little bit more wider, a little bit more cleaner price action. And now let's continue. Hey, KD. What's up, bro? All right, hold on. Let me finish my chart breakdowns and then we can talk about it. Looking at NAS 100. Yeah, so this is our levels. We have our current high all the way up here, my previous higher low right over here, the one on time frame. This is overall just consolidation. I don't really want to participate in this area. So for me to take a buy continuation, I'd rather see price come up and re-break this previous high, looking to re-break this current high, a retest, and a continuation. Other than that, I don't really want to take sales because sales are counter to the overall higher time frames, meaning the 4 hours at all-time highs and the daily is at all-time highs. No point in selling that. So to the person in the TikTok comments that just said shorts on NAS 100, if you want to short NAS 100 at all-time highs, go for it, buddy. But shorting that all-time highs is kind of fucking crazy. If the market is already telling you that we're making new highs, why would you want to short something that's making new highs? It just doesn't make sense. Is NAS 100 the same as NQ? Yes. NAS 100, NQ, and MNQ are all the same thing. They're all the NASDAQ. Just the price action, the actual price would just look a little bit different, but the price action will look exactly the same. As you can see, this is NAS 100. If I go here and I type in NQ, as you see, NAS 100 is at 24K. If I go to NQ, it's going to be, it's actually the same as 24K. A lot of times, it's a little bit off, though. But as you can see, this is the same kind of price action. If I look at this price, it looks exactly the same. Just that NQ has a market gap, and the NAS 100 doesn't show you the gap. If I do MNQ, it looks the exact same. Just you got a gap here, and as far as NAS 100, just doesn't show you the gap. So does it matter what you chart on? No, not to me, not really. It doesn't matter. Just your entry and stop loss will be a little bit different. See, here is 24.4K. I think NQ was 24.7K. So yeah, 24.7K on NQ and 24.4K on NAS 100, but they are both the NASDAQ. So one of the Forex NASDAQ and the other one is a futures NASDAQ. Was same price action, just different actual price. So to the guy that says short NAS at all-time highs, good luck with that, buddy. I'm not saying that shorts can't play out because price is going to make a retracement at some point in time, but it just lower quality of a trade to try to fade all-time highs. Think about this. At some point in time, this was the all-time high because we broke this high here. People that try to fade here, lost. This was the all-time high. People that try to fade here, lost. All of these are considered all-time highs. People that were trying to fade all of this end up losing. The fade didn't happen until up here. The people that faded up here, they made money. But how many times did they try to fade before they end up getting this one win? Again, we broke this high over here. People that try to fade this all-time high, lost. And the people that faded here made some money, and then it continued higher. So again, people that's fading up here could be making money, right? If they got a sniper entry or a top tick. But again, how many times are you going to try to fade all-time highs and lose before you get that one win? It just doesn't make sense on a probability basis. Does NQ and MQ differ? Yes. NQ is the regular NASDAQ with contracts, and MQ is the micro NASDAQ with contracts. So MQ just the same as NASDAQ, but you get to use lower contract size. So for smaller accounts, you got a bigger account and you want to risk a little bit more, do NQ. Got a small account, want to risk a little bit less, do MNQ. That's just micro NASDAQ. So I mean your contract size is a lot smaller. So it will be less money per point. Let's look at NZDUSD. So that's what I think about NAS 100. I look like buys on the 1 hour time frame above this area. As far as sales, I wouldn't short until price ticked out the previous low that was created on this 4 hour time frame, which would be these lows all the way down here. So I wouldn't sell until price tick this low. Other than that, strictly looking for buys. I bought an NVIDIA call yesterday at 170 that expires in 2 months. What's your thoughts? NVIDIA's? All right, I'll give you that. I'll give you that in the break. I will answer that after I finish the rest of these pairs. I got you though. But 2 months is a long time, bro. You a position trader or what? Let's look at NZDUSD. Let's clear my chart and start it all over. Daily time frame is overall bullish. How do I know it's bullish? Because price took out this high that This is the highest point that Christ made before taking out this low, meaning this is my most recent lower high, and now price just took that lower high. So we're technically still bullish. This is just a bearish retracement of overall bullish trend. As you can see, we have a higher high, higher low, and a higher high in this area. So the daily time frame is indeed bullish. Let's go to the 4-hour time frame now. Again, 4-hour time frame, we're bearish. How do I know we're bearish? Because again, we have the same high right over here where we made a new high. This was the lowest point the price was before making that new high. And as you can see, this lowest point got taken out, meaning we are now bearish. So we took out this highest, this lower high. Let me know that we're now shifting bearish structure on the 4-hour time frame. Looking on the 1-hour time frame, are we bearish or bullish? We're bearish. How do I know? Same exact thing. We're making clear lower lows and lower highs. As you can hear, this is our previous low. Our previous low got taken out with current price right now. This was the highest point price was before taking out this low. So this is where we go bullish. So recap real quick. Daily is bullish. 4-hour is bearish because we took this low. 1-hour is bearish as well. Because I have the 4-hour and 1-hour both bearish, I'd rather take sells than buys. Just looking at the 1-hour time frame, let's mark off my current low, previous low, and current lower high. So this will be my current low right over here that we just broke. This will be our previous low right over here that already have us, the price already gave us a break and retest at this area. And then our current lower high was be the same exact area because this was the break and retest. So in order for me to take sells, I want to see price break and retest below this previous low. And we already got the break. Now we're having a retest right over now. We could potentially take some sells in this area. B sells in this area. We already got the break. We just need to retest, and then we can look to left hand side. We have clean candles to fill. This is a big range to fill. Looking left, we can look to take these targets all the way down here with clean price action to fill in this imbalance. This looks pretty clean. So this ad is up there with AU. Can you show Riot? I don't know what Riot is, but after I'm finished my breakdowns, I can look up anything that I want me to look up. What's your insight on Euro USD? I'm looking to short overall, but trying to buy the Asian liquid retracement. I got you. Let me finish all of this first though. NZD USD done. We did NAS 100. I didn't do GJ. Let's do GJ right now. Looking on GJ, daily time frame is overall bullish. How do I know? We just broke these highs all the way up here. Very simple. 4-hour time frame, overall bullish. We're making a new high above this high here. Very simple. But we are in the retracement phase. This is just a very, very, very deep retracement. Looking like we want to take this low. If we could take this low, we go bearish on the 4-hour time frame down here. Then at a 1-hour time frame, we're already bearish. How do I know? We took out this lowest point before creating this new high over here after we had this break of structure. So 1-hour is bearish. Our 4-hour is still bullish though. So I really wouldn't want to sell until our 4-hour goes bearish alongside the 1-hour already being bearish, and that doesn't happen until price takes this low. So we can have some potential sells below this area for a trend continuation, and look to target these lows all the way down here. Other than that, below this low, we can look to target these lows down here. This setup looks pretty trash though. This is not a high quality setup because all of this is just straight chop. Right? We were trading right into all of this chop. And I really don't want to do that. So even though the setup could play out, I'm really not too excited about taking that. Do you day trade stocks or crypto? I day trade Forex and futures. So I don't day trade stocks or crypto. I long-term invest in crypto, but not like short-term, not like day trade crypto. And I don't mess with stocks at all, but I do understand stocks and I do know how to navigate the market. I just don't. Let's look at gold. Daily time frame, overall bullish. We had all-time highs. 4-hour time frame, overall 4-hour time frame gets kind of tricky. Hold on now. We're making a new high above this high. This is our most recent higher low, meaning price looks like we might take this low out, but other than that, we might be bearish. Look on the 4-hour time frame. That's the 1-hour. Let's go to 1-hour time frame. 1-hour time frame, we made these equal lows right over here. Price is really struggling to break above below this area. So we can look to take some sells below here alongside the 4-hour already being internally structured bearish. And then other than that, this is the range that price is currently in. We can look to take buys above this area. But as far as where current price is, I don't want to trade this price action. If we get buys above this area, we can look to target these highs up here. If we get sells below this area, we can look to target these lows here. Very simple, but based off of where current price is, this is a indecision level, right? We are in a bearish internal structure, but we are still at all-time highs on the 4-hour and daily time frame. We're just in a retracement phase. So I really don't want to fade up here until our 4-hour time frame confirms bearish below this bullish engulfing and starts to trade back down. Then we look to target these lows. Then below this area, if we can get a scaling entry to scale in our daily bias, we can look to target these lows all the way down here. That looks pretty clean. That's actually This might not be something that's set up to the New York session, so we're not going to favorite it, but we are going to add it up here. Look at GA. Are you profitable? Yes. I've been trading for the 4.5, almost 5 years. At the end of this year, I'll make 5 years, and I've been consistently profitable for the past 2.5 years. Looking at the daily time frame on GA, we are bearish. How do I know? Price took this low down over here, making a new low, which is in a retracement phase of overall bearish push. Look at the 4-hour time frame. 4-hour time frame is going bullish. How do I know? We took this higher low, this lower high right over here. Now we see we have internal structure, higher highs and higher lows here. This is our new high. This is our previous higher low, so we're bullish on the 4-hour time frame. Looking at 1-hour time frame, we are bearish. How do I know? Because price created a break of structure right over here where we made it a new high. This was the lowest point before making that new high, and then eventually price came down to take this low. So we are in a bearish push on the 1-hour time frame, just a bullish retracement. But if I 1 hour do go bullish back above this area, if this could just look at, if we do go back above this area, that just means this push down with just a fake out below these lows, and then the trend continuation to the 4-hour already being bullish, meaning this is the end of a 4-hour retracement. If I use my Fibonacci tool and draw it from the lowest point to the highest point of this push, this is a 50% to 6.8% rejection off of this 4-hour level. Let me know that we could have some strong buyers here on the higher time frames. Back to the 1-hour time frame. The 1 hour is technically bearish right now, but we do go bullish above this area. So if I want to sell on a 1-hour time frame, I need the 4 hour to shift bearish first. That doesn't happen until price come down to take these lows. That's well away from current price. But if it happens, it happens, and we can look to target these lows down here. Other than that, I like the buy side more. And if we could get buys above this area, we can look to target these highs up here. Let's add this up here. Let's look at GU. GU daily time frame overall bullish. How do I know? Price making a new high above these highs right over here. 4-hour time frame, we are bullish, but potential to go bearish if we close below these lows down here. So looking at the 1-hour time frame, clearly bearish. We just made a new low breaking below this previous low right over here. So the 4-hour is bullish, 1 hour is bearish. So their time frames are contradicting. I need them to be in sync before me to take a trade and pick a direction. So where would that be? The 4-hour goes bearish below this level. We can take sells alongside the 1 hour already being bearish. Or if the 1 hour goes bullish above this level, we could take buys alongside the 4-hour already being bullish. We take these buys, we can look to target this wick fill. From that news, if we could take these sells down here, we can look to target this level of support down here. Or for a deeper target, we can target this level of support down here. Or we do have a minor level right here as well. That's that. Other than that, where price is currently at, I'm not interested. Let's look at UJ. This is the last one. Daily time frame, overall bearish below this low. Looking at a 4-hour time frame, we're bullish above this high. Looking at a 1 hour time frame, we're bullish as well. Oh, actually, 1 hour time frame, we're bearish. How do I know? We created some equal highs here. This was the lowest point before price created the equal high. This lowest point got taken out. This is where we shifted to bearish direction. A 1 hour time frame. A 4 hour time frame is bullish, so these time frames are contradicting. In order for me to take a buy, I need a 1 hour time frame to go bullish alongside the 4 hour time frame already being bullish. Ask myself, where does that happen at? If we break and close above these equal highs, making a new high, we can have a trend continuation on the 4 hour time frame to go higher. As far as for me to selling with the 1 hour, I need a 4 hour to go bearish first, and it doesn't happen until price take these lows. It's far away from current price. Other than that, this is hella consolidation, hella chop. Look how long this price been faking out in this area. We had a fake out above, close back below, fake out above, close back below, fake out above, close back below. Right, we got faked out in this area too many times, so I really don't want to trade in this area at all. I like the buys above this area a lot better because we're trading above this resistance and above this resistance outside of the fake out area, and then we can look to target these highs over here. We have clean traffic looking to the left hand side. Ah, that was fast. Do you do it based on the chart or the news? I do it based on the chart. I don't really pay attention to news. If there is a high impact news or a rat folder based off of Forex Factory, I just won't trade during that time. So if it's like 8 o'clock, if it's like 8 a.m. news, and I'm already in the trade, then I will hold my trade up until 7:55, and then I will close. I don't care where it's at. Profit or drawdown, I will close it at that very second. I don't trade news at all. I am giving you high quality signal. I don't need any high quality signals. Appreciate it though. So what did y'all want me to look at in the chat? What pairs y'all want me to look at? Hey, Trade Diva, don't piss me off. All right. My Telegram link bio. Yeah, okay, buddy. Let's go ahead and just mute you, bro. You can have a 5-minute timeout. Riot, Ethereum. So we could do Riot because I remember him saying Riot earlier. What is Riot though? Is that a crypto? What time is it for you right now? It's 1:56 a.m. Bro, how do you deposit money into TradingView? You can't deposit money into TradingView. TradingView is the platform where you view the markets at. TradingView is not its own broker. There are other brokers that you can trade with on TradingView based off of that broker being regulated, like Owanda. So as you can see, all of these names right here are brokers, are liquidity providers for this specific asset, right? So stuff like Owanda, Forex.com, brokers like that are regulated, you could trade on TradingView if you deposit money through those brokerages. But specifically, just deposit money through TradingView, you can't do that. I did a call until 10/3, October 3rd. Break even is 1775. All right, so looking at Riot on the daily time frame, we're overall bullish. How do I know? We are making a new high above this previous high to the left hand side. Looking on the 4-hour time frame, we're overall bullish as well. How do I know? We are making a new high. We broke this previous high to the left hand side. This was the lowest point before creating that new high, and we never broke below this area. So technically, we are still bullish. Look on the 4-hour time frame, not the 4-hour, the 1-hour time frame. We are bullish as well here. How do I know? We created some equal highs right over here. These equal highs eventually got taken out as price made a new high up here. This was the lowest point before price created that new high. This is just a mid. This is like a minor level. This push up didn't really create equal high or a new high, so this pivot point is not really significant to current price. So daily is bullish, 4 hours bullish, and 1 hour is bullish. We're just in the consolidation phase of overall bullish trend. Could be a retracement, right? Don't quite know yet. These will be the levels based off of this being our major level of resistance, this being our major level of support. Your end cost, your break even is at 17.75. So yeah, you can look to target these 1730 area down here because this is our next potential rejection area. Price struggled to break here. Price came down here, had a big reaction off of it. Price came down here, had a decent reaction off of it. So you could anticipate that if we come down here again, price could have another reaction. Other than that, if you get break even at 1775, that will be based off of this minor level of support here, resistance here. So the 1775 area is based off of price rejecting here, price rejecting here, price rejecting here. But I do think price could come back up into this area. So I'm thinking price could come back into the area to retest before continuing down because we have a break below, a fake out bias, then the price coming back down into this range. We're creating some equal lows here, meaning it looks like prices might be struggling to break this 1746 area. So we might have a pullback into 1770. Before we have a continuation to the downside to then come down into the 1730 area. But based off of your calls, I think you should be good. You can day trade after hours, and is it better to trade after hours or during? So I trade during. So what are you trying to trade though? Isaac, what are you trying to trade? I mean, not Isaac. TikTok system notification. What are you trying to trade? We're not TikTok. Isaac, that's what I'm talking to. What are you trying to trade? Are you trying to trade the futures market or Forex market? Because the Forex market doesn't have after hours. We have intercession. We have 20. The Forex market is a 24/5 market, meaning the market's open 24 hours a day, 5 days a week. But we have different sessions that provide different volatility levels for different pairs. If you want to trade Asian session, there are pairs to trade during Asian session. If you want to trade London session, there are pairs to trade in London session. If you want to trade New York session, there are pairs that has high volume during New York session as well. So there is no after hours when it comes to Forex. For futures, it's a little bit different. Like most future traders trade New York session. London session is a little bit slower in volume. But yeah, it's just situational. How often do you turn the pre-post and open market on TradingView? I can't figure it out. I have no idea. I'm not gonna lie to you. But to the guy that wanted me to look at, right, this is what I think about, right? We may have a pullback into 17.70 before we continue down to 1730. I'm not 1730, 1729. Other than that, I wouldn't want to really take buys until price break above 1809. But this is overall consolidation. But this looked like we have an impulse up and a slowdown in the price for a potential reversal setting up. I don't know what you mean by pre-post in open market. Oh, pre-market, post-market, and open market. Okay, that's what you mean. So how do you turn that on? It should be an indicator for that. If you referring to NASDAQ, if you go on indicators, type in kill zones, you can see daily, actually, session times. Trading sessions, here we go. Trading sessions here will let you know what session you're in and by the color. So blue will be Tokyo session, meaning Asian session. Asian session would be post New York, but the beginning of Asian session will be post New York. The beginning, let me slow down. I'm talking too fast. The beginning of Asian session will be post New York session. The end of Asian session will be pre-London session, and vice versa. The beginning of New York session will be post-London. The end of New York session will be pre-Asian. And then the beginning of London will be post-Tokyo. The end of London will be pre-New York. But if you want to look at the session times, just go to indicators, type in trading sessions, and it'll tell you the session start times and the session end times by color. And if you only trade New York session, all you have to do is hit the setting tool, go to sessions, scroll down to sessions, and just hide all the sessions that you don't trade. So if I want to hide London session, I would just check this and London session will go away. If I only want to see New York session, I will hide all of them and just leave New York session. So I'll hide everything besides New York, and actually note, if I look back left, only thing I see is New York session. So if you want to do it like that, and you can do it like that. Like that works. Oh my God, thank you, no problem. What's the least amount of money do you recommend day trading? The least amount of money day trading, about $250. Reason why I say $250 specifically is because with $250, you wouldn't know what it feels like to actually lose your own money or make your own money. You're not looking to day trade with that $250 as in I want to get rich or I want to make money or I want to pay my bills off of $250. That small deposit is looked at like you're using this capital to get a real feel on what it feels like to trade your own money, know what it feels like to lose and win with your own money, and get while you're learning at the same time. So you're not looking to try to turn that $250 to $5K or $10K or whatever it can be. You're just looking to build reps in and get a consistency down. And once you get the consistency down with $250, where you can make 10% a month on $250, which is about $25 a month, right? That's not a lot of money. It's not going to do nothing in your life, really. It's a fucking McDonald's meal or Five Guys meal, right? But as you build that consistency, you can take that same approach and do 10% a month on 100K. Take that 250, withdraw that whole 250, buy it, put it into a prop firm account, and you already know how to trade because you know you can make 10% a month because you did it already with managing small money. And now you get access to a lot more capital. And then that 10% goes from $25 a month to $20K a month. But scaling. But before you can scale, you got to prove to yourself that you have what it takes to be a profitable trader first. If you can't manage $250, how can you expect someone to let you manage 100K of prop firm capital? If you can't manage $100, how do you expect to be able to manage 10K, 25K, 50K, like them prop firm numbers? People think the more money you trade with, the easier it is to trade because you get more drawdown and all of that shit. No, it's not how it really works. Can you do LLY, please? What is LLY? I don't know what that is, bro. So my top three pairs for the night, though, is AU, NZD/USD, and GA. Eli Lilly stock. Okay, let's look at it. Never even heard of it. It's my first time looking at it right now. Eli Lilly. This it? Oh my God, look at these market open gaps. It just looks terrible. For sure, thank you. It's a psychological thing, huh? Yeah. So trading with smaller amounts of money is a psychological thing. People trade with low capital expecting to make a living off of it, and when in reality that's not a trade. That's not. sustainable, right? You really want to use that low capital just to build consistency on the percentage gains, and then take that same system that you already built with low capital and then apply that to popcorn space, and that's how you scale. Can you do Tesla? Yeah, I'll do Tesla right after this. I think this is what you're talking about. Looking on the daily time frame, we are overall bearish. How do I know? Price took this low, made a new low. This is just a retracement phase of overall bearish trend. Looked like we filled this gap right over here. Let's get this fucking ad. Daily time frame is bearish. Looking on the 4-hour time frame, we're bearish as well. We just have internal bullish structure. How do I know that? Because price didn't take out a significant high that created a new low on the 4-hour time frame, but we are making internal higher highs and higher lows, as you can see here. So this is internally bullish structure on the 4-hour time frame. Let's look at the 1-hour time frame. Looking on the 1-hour time frame, we are bullish as well here. How do I know? Because price took out this high. This is the highest point before making a new low where we shift to go bullish. Looking at this bullish structure, we see higher high, higher low, higher high. This is a retracement phase of overall bullish trend. This is a deep retracement though. This retracement hasn't taken out this previous low that created that new high right over here. Look like we're rejecting off of this overall area though. So this is the top of the range where we have a vital level of resistance. Let's look left to see how this resistance hold up to previous price action. So we do have some more chop or consolidation around this area. So reset chart going current price. This is the top of the range. As you can see, we failed to break this level 1, 2, 3 times. Based off of this level down here, let's draw it from highest body to lowest wick and look left. As you can see, we have choppiness all right over here, some fake outs right over here, and rejection right over here. So I do like this level. If you want to sell, you can look to take some sells at we break and retest this 134 area. And if you do get them sells, you can look to target these areas down over here, this 131.48, because this is the bottom of the range where we have clean candles to fill based off of this price action specifically. If we can close below this area, then you can look to target these lows down here. Other than that, for the buy side, you can buy above this high over here, and then you have a lot cleaner targets to target all the way up here, which will be our next level of resistance. We have rejections here that have big reactions off of, rejections here that have big reactions off of. So you would anticipate that if price does come back up to this area, we may have another big reaction off of it, going opposite to the way you're trading. Daily time frame overall bearish, like I said, just in the retracement phase of a bearish push. We're looking at a 4-hour time frame. 4-hour is making some equal highs. So if we could take even this low, I like this low better. So I think selling below here is a little bit more risky just because the 4-hour is still bullish in this area. We do go bearish below here on the 4-hour time frame. So this would be a higher quality trade when it comes to sales. And as far as buys, the high quality trade would be above here, where the 4-hour and the 1-hour are both bullish above this area, but you would just be fading the daily time frame. And down here you have all time frames in sync. The daily, 4-hour, and 1-hour will all be bearish below this 132 area. Then based off a higher time frame, like the 4-hour or the daily, you could even target these lows down here or this overall low down here. Can you do Tesla? Yeah, I could do Tesla. Listen to him because I lost a ton of money thinking more money equals more profit. Now that's facts. Yeah, the more you think more money equals more profits, that's crazy. Because if you can't manage $100, how you gonna be able to manage 1,000? Can't manage $1,000. You can't manage 100,000. And that's a problem with the how you was raised. Like that's a subconscious problem, not just in trading. Like people think when they get a better job, they're going to be able to save more money. But in reality, once you get a better job, you just develop more spending habits. Your taste gets more luxury. Then you overall still live check to check just because you started, even though you got a better job. Same thing with trading. Just because you get access to more money doesn't mean you're going to start making more money as a trader. You're just going to get higher taste or more luxury taste. And your spending habits are going to increase. You're going to be taking on more risk because you have more money, thinking that that's how it works. When in reality, it's the total opposite. But again, that's a habit that is very common in everyday people and is installed in you as you grow up. So that's a hard habit to shake, and that's a habit you're going to have to shake when it comes to learning how to trade. Somebody said Tesla. Looking at Tesla on a daily time frame, we're overall bullish. How do I know we're bullish? We just took up all of these highs to the left hand side where price is making a new high on the daily time frame. Looking on the 4-hour time frame, we are bullish as well. How do I know that? Because price created a new high above this previous high to the left hand side, or relatively equal highs, whatever you want to call it. So 4 hours bullish as well. Looking at the 1 hour time frame, we are still bullish. How do I know? Because price broke above this previous top to the left hand side right over here, making a new high. So based off of Tesla, I would rather buy than sell overall because we have more time frame telling us to buy than telling us to sell. It makes more sense to buy. It's higher probability. This is our current high up here. This is our previous high right over here, which did fail. This is our current higher low. This level did fail, so I really wouldn't want to trade off of it anymore. Actually, we may actually have a trade off of it. Price gave us a break, a retest, and looking for continuation. If we draw our fib 2 from the lowest point to the highest point of the overall main push, as you can see, price is in a discounted area to take longs. If price can close back above these previous highs to the left hand side, give you a retest, you could take a trend continuation to target these highs right up here. Other than that, you could take some buys above here where it's still pro trend just a little bit later. If you don't get an entry right over here, you can look to buy above here. And if you could look left all the way over here to find a potential target, you can look to target these highs here, or you could even target these highs all the way up here, which is far away from current price. You could look to have this potential area right here as a target, or even this area right here as the target. And as far as sales, look at 4 hour time frame. I wouldn't want to sell in this overall price action until price take this low down here. Why? Because this is the lowest point price made before creating this significant high over here. So technically we're still bullish as long as we stay above this area. This could just be a steeper retracement to a continuation later on, setting up for buyers later on, giving them a better price to buy at. So until price take this low down here, I really wouldn't want to sell. If you do sell after we get a break retest of this low down here, you have clean candle to the left hand side to fill in all the rest of this imbalance, the price to come down to bounce off of this area, or even come down to tap into this area. So sells below here, you can look to target this range down here, and buys above here, you can look to target any of these range, any of these levels on the 1 hour time frame. That's how I think about Tesla. What's high volume enough to be worth trading at that price though? I don't understand that question, Rory. Volume is determined by the size of the candles. Big candles is high volume, small candles is low volume. Consolidation is low volume. Impulsive moves is high volume. So if you see a market that's having impulsive moves or big candles, you know that is a high volume time. A market is overall consolidating, or your smaller candles, like you see dojis and things of that nature, that is a low volume time. Like over here, you see these candles are very small. This is low volume. As you see here, the candles are getting bigger in size, bigger bodies, stronger bodies. That lets you know this is the high volume time, clear direction. But volume is determined by the size of the candles. Thank you, no problem, bro. Just out of curiosity, what's the most that you made in a day, and what was the amount you put down? So when it comes to me teaching or like talk like live trading and stuff like that, I don't speak when it comes to dollar amount. I speak when it comes to percentages. Now, it is a reason why I do that. It is a psychology hack. Again, trading is 95% psychology. It's not really learning how to do technical analysis. Technical analysis is a part of trading. Like, you can't neglect your technicals. You can't neglect your technicals, but it's more so harder to trade psychologically than it is to trade technically. Now, reason why I say that, this is a psychology hack to change your perspective from money to percentage, because money will change. I don't want you to get fixated on the most amount of money that I was able to make as a trader, or in a single trade, or anything in that nature, because you will unconsciously start to chase those results just because you know that's possible, even if you're not doing it purposefully, right? But if I talk in percentage, it's a lot easier to understand and correlate that to your own account. So if I say I made $1,000 in one day, you can look at like, oh, $1,000 in one day, that's a lot of money, right? That could be good for me. But you might not have access to the same amount of capital that I have access to. When $1,000 in one day, it just could be 1% or even 0.5%, meaning that's nothing, right? So I teach people to focus on percentage gains and not necessarily the dollar amount, because the dollar amount will always change, but the percentage would always stay the same. Meaning, if I'm targeting 5% a month overall, 5% a month, and I build a system that consistently makes me 5% a month, 5% a month on $100 is nothing, right? It's only $5. 5% a month on $1,000 is nothing. It's only $50. 5% a month on 10K is not really much. It's only $500, right? But as you can see, the number increases from 5 to 50 to 500 over, and it just keep increasing. Every time I add a zero, I add a zero to the 5%. But guess what never changed? The percentage never changed. The dollar amount will always change, but the percentage will never change. So all you have to do is get consistent at making a certain percentage gain, and be able to do that consistently, and then get access to more capital, meaning go with the funded route. So I don't talk about dollar amounts when it comes to the most I ever made or anything like that. I talk in percentage. So I want to tell you, the most I made off of a single trade was 7%. I had 7% on one single trade. And 7% to me, you could just equate 7% to whatever your account size will look like. If you 7% of 250, 7% of 100K, 7% of 500K, whatever your account will look like, do 7% of that. And that's how you correlate on what that dollar amount will look like for you if you was to get that kind of result. That's a psychology hack, bro. Detach yourself from the money aspect of trading and attach yourself to the percentage gains, because percentage gains will never change based off of the system, but the money will come naturally just from getting good at making 5 to 10% a month. Comparison is the real downfall. That's facts. Comparison is definitely the real downfall, because everybody's journey doesn't look the same. I know somebody that's been trading for 9 years is still unprofitable, but he's still taking that, trying to improve it every day. What platform is the best to sign up with? There is no best platform to sign up with, to be honest, in my opinion. It's just like, what platform do you trust? Now, you can go the regulated broker route. I'm going to say the best platform to sign up with is any broker that's regulated, because you don't got to worry about the scammy shit, like getting denied a payout or getting denied a withdrawal, things of that nature, getting market manipulated or whatever the case may be when it comes to regulated brokers. But the difference between regulated brokers and unregulated brokers is unregulated brokers give you more leverage than regulated brokers, meaning you can make more money in a shorter time with unregulated brokers. But the problem with unregulated brokers is if you pick an unregulated broker that's not trustworthy, there is a small percentage chance that you might not even get paid once you make that money when you request that withdrawal. Now, I'm not saying that to discourage you from trading with unregulated brokers, because I trade with unregulated brokers personally. On my live account, I still actively trade with unregulated brokers, and I've been trading for almost 5 years. So I'm not telling you that to scare you from trading with unregulated brokers. So the safest route is to go regulated, but other than that, it is what it is. Now, I'm not going to tell you which one is better than the other, because I only can speak from personal experience. The broker that I trade with right now is called CoinEx. If you want to see what it looks like, if you go on your web browser, type in CoinEx, it looks like this right over here. This is the unregulated broker that I personally trade with. It is an offshore broker, but haven't given me any problems. So I never got denied a payout when I requested withdrawals and things of that nature. I don't have to worry about getting slipped or come in, anything like that. So nothing too crazy. Other than that, that's all I can tell you when it comes to that. Again, this is not in no way, shape, or form financial advice. This is just me personally sharing my insights on my market experience. And of course, do your own research. Let's go back to look here. Let's see if we get a retest yet. No retest, no trade. We got a closure below. Let's see if our retest look like. No retest, no trade. Okay, we did get a slight retest, but this retest didn't take out structure first. So still no trade there. Let's look at GA. Still we're even there where I want it to be. What about Forex? So yeah, that was the broker I just showed you was a Forex broker. I started on Robinhood. Yeah, Robinhood is good Robinhood is good because it's beginner friendly. This is some real foundational philosophy. I appreciate this, no problem, bro. I want to be the person in the trading space that I wish I had when I was a beginner trader. So I don't keep nothing. I tell a real raw aspect of trading, and I'm not trying to hear this. I'm not here to sell y'all a dream. Like, I don't sell any courses. I don't sell any mentorships. Like a lot of these other TikTok YouTubers, I make money off of trading, and I have 2 other aspects of business that I'm working on that is bringing in income outside of trading itself. So I don't need to sell you anything trading related, like a course, a mentorship, anything like that. I'm just strictly here to bring value. I'm not saying that to say I won't end up selling anything later on in life when it comes to forex trading, but as of now, I don't feel like making a course or anything like that. That shit takes too much time, and I really need to. So, I'm just here to give you the raw reality of trading, and not just that forex guru shit or the futures guru shit that you see on TikTok, where everybody hitting 1 to 7 risk rewards and getting and blowing the account the next day. Do you do 90 DTE or 30 DTE as well as day trading? No, I just day trade, bro. Show us one of them regulated ones. A regulated one, Owanda. Owanda. This is a good regulated platform. To figure out the regulated versus the unregulated ones, you could look it up, to be honest, or you could just go on TradingView, type in a pair, GBP, let's do GBP, JPY. Anything you see here is regulated most of the time. 90% of the time, anything you see here that's actually associated with TradingView most likely will be regulated, like Owanda. Like, I can link my Owanda account to my TradingView and trade strictly off of TradingView and not have to even go through my Owanda account to actually place my trades, or like my Owanda MetaTrader or trading terminal. Same thing with FXCM, same thing with Forex.com, same thing with Pepperstone, CapitalOne.com, IC Markets as well. You can link all of these providers are just providers that are showing you GBP, JPY price action just from different providers. And all these providers here are brokerages. But the one I would say is Awana, because all of my charts here, I always click Awana charts. Just, I don't know, it might be placebo, but I always just click Awana. TS take too much time. Come on, gang. That should take too much time. What take too much time? What did I say take too much time? I've never looked into Forex and don't know how it works. Forex is the same. Okay. The difference between, okay, all of the financial markets are just alike, right? There is, me personally, I don't think there is no one financial market that's superior to the other one. I don't think Forex is better than futures. I don't think Forex is better than stocks. I don't think stocks is better than crypto. I don't think crypto is better than indices. Like, I treat them all equally because they all use the same terminologies. They just flip the words. With Forex, you see buy or sell. Futures, you see buy or sell. Options, you see call and puts. Fucking Forex, you see longs and shorts. Like, they just change the words. They all mean the same fucking shit. When it comes to Forex, instead of futures, like when it comes to futures to Forex, futures you're trading contract sizes, Forex you're trading lot sizes. But that's all how you calculate risk. They just change the way you say it. When it comes to Forex, that is a CFD. CFDs, you just betting that one currency value gains and one currency value strengthens compared to the other currency's value, and that could be driven by economic news, or just money being fluctuated between banks and international transfers. And that's how the market moves when it comes to Forex. When it comes to futures, the market is moved by contract sizes and money and what's actually implemented in whatever that future that you're trading. Yes. I'm not going to say hacks, but Forex is more manipulated than it is futures because Forex has less regulations than futures. Futures is more regulated than Forex. But I don't treat any of them different. Like, the way I trade Forex is the same way I trade futures, or the same way I trade indices, or the same way I trade crypto. How many hours do you trade daily? I trade for 2 hours. So if I come on at 1 o'clock, I'm off by 3:30, 2.5 hours. If I'm on at 3 o'clock, I'm off by 5:30. So I got on at 1 o'clock today, so I'm gonna end at 2 o'clock, 2:30ish. If you see someone promoting how much they may run. Hey, Linda, you funny as fuck, bro. What do you think about trading bots? Do you trust them? I'm in the process of making one, but trying to understand trading at the same time. The thing about trading bots, I just think they have to be updated. They have to be maintained and updated because market conditions change, volatility levels change. Like 10 pips for gold. Well, gold, I want to say gold 2 years ago, I was able to have a 15, 20 pip stop loss on gold with no problem. Trading the same strategy. Now my stop loss would be like 50, 60 pips just because the volatility level increased a lot in that time span. because volatility levels change, market conditions change, all of that stuff actually affect the market. Bots have to be updated. If you're not updating your bot is going to get left behind. But if the bot works and is profitable, then of course run the bot. How long do you hold your trades? I hold my trades from around 4 to 7 hours. But because I intraday trade, like that doesn't mean it takes me 4 to 7 hours to hit my first TP. I will hit my first TP within the first like hour or two. And by the time I hit that first TP, I've already taken partials, and now I'm holding the runner to just try to maximize my profit and let the runner run to death do us apart, or until I eventually get taken out that position, or until I partial out enough. So that's why my hold time is so long. But I hit my first target within the first hour or two. Currently buying on Euro USD. What's your insight? Euro USD. Daily is overall bullish. 4 hours overall bullish as well. We're just in a retracement phase. The retracement could be over, but I don't think the retracement is over until the 1 hour gives a structure shift first. The 1 hour is still bearish. Your buys are approaching to the 4 hour and a daily level, but because it's 1 hour is still bearish, where we're creating some clear lower lows and lower highs, and we haven't took out a significant high that created a low, that just lets me know that you might be either one, you're going to get a good ass risk to reward because you bought before the reversal actually happened, or you're going to get faked out and trade prematurely, and then the reversal is going to happen after the price already takes you out. So my insight on EU, I like EU buys, but I don't like them right now because I don't want to buy against this overall internal bearish lower lows and lower highs. In order for me to buy first, I need to see either price come up to take this high without taking this low first, then I'll be open to buying up here, or price come down to create an equal low first, then break and close above this high, then I can take this buy here. So we already got the equal low. If we could close above this area, this lets me know that the 1 hour is now making a low, a lower high, a equal low, and now we having a reversal at this area. But as far as where current price is actually at, this is a tricky area because price could easily just come down and take this low and stop you out, or price could reverse here and then price could slow down here and then give you a reversal pattern for your buys to play out. But I am bullish on EU overall, just where price is currently at. I'm just not bullish just yet. I need to see some kind of confirmations in this above this area first to let me know that we are overall going to continue up with the overall 4 hour and daily direction being bullish. Then if we can get the buys above this area, we can look to fill this wick all the way up here, making an equal high here or a new high up here. What time zone do you trade in? So I use the daily 4 hour and 1 hour to identify my overall levels. Then I use daily 4 hour and 1 hour to determine my direction, whether I want to buy or sell. I use the 1 hour time frame to determine my levels, and I use my 5-minute time frame to enter. So I don't just use one single time frame. Every time frame plays a big part in my trading, not just one time frame. New to doing it, what's a good coin to invest in? I don't invest in coins. Well, I do invest in coins, but I don't day trade coins. So when I dabble in crypto, I'm dabble in XRP and Bitcoin. That's it. So I can't tell you a good coin to invest in. Those are the only two coins that I put money in, XRP and Bitcoin. I called Bitcoin multiple times. I called Bitcoin at 70 cents. I called Bitcoin at $1.16. I called Bitcoin at $2.10. I called Bitcoin at $3. And those are all multiple scalings that I've called live on TikTok and on YouTube and on Instagram, as far as like a Instagram video, like buy this is a good time to buy XRP, so on and so forth. I got proof of all that as well. But as far as coins, I don't trade them. I position size hold them, like for long-term investments, and I do XRP or Bitcoin. And what time zone do you trade in? Or I answered that already. So use daily 4 hour and 1 hour for direction, 5 minutes for entries, 1 hour for levels. To give you the analogy that I like to tell people on how I trade, this is how I like to explain it. I'm gonna give you a hypothetical, right? Do I trade options? No. Anything you see here to the right hand side is stuff that I actively trade. But that doesn't mean I don't know how to trade options. I just don't, because if it ain't broke, don't fix it. I make money with all these pairs here. I don't want to put too much, right? So all of these stuff here is what I trade, and on a day-to-day basis. But I only trade whatever you see is at the top. Whatever you see as bookmark, that's letting you know that this is what I'm focusing on for today. So this might switch around as far as the order, but everything here is what I do breakdowns on and what I actively trade. But to give you an analogy on how I basically trade, if you've been here before, you heard this. You heard this already. For all the new people that haven't been here before, this is gonna be your first time hearing it. But hypothetically speaking, say I was a street hustler in New York, Times Square, whatever, right? And I played one, you know, them games where people be having to putting the ball under the top and they be flipping it around all fast and shit. You got to bet which one is under, and then they take your money and shit like that. See, I did something like that, but instead of the balls in the top and all that other stuff, I'm gonna tell you my game, and we're gonna play it like fake, whatever, fake play it. Okay, I'm gonna tell you the rules. There are no hidden rules. There's no hidden trick. There is no hidden scheme to playing this game. Everything I tell you now is how the game actually works. Okay? Inside this game, you are to bet on a specific crayon that you pull out of a bag that I will have. Okay? Before you put your hand in the bag and pull out a random crayon, I will tell you, or I will physically show you that there are 3 crayons that are going in this bag. 2 crayons are blue, 1 crayon is red. I will show you. You will see me put all 3 of these crayons inside this brown paper bag. You cannot see through the bag, right? They're not trick crayons. The crayons can't switch colors while they're in the bag or nothing like that. You just know that there's 2 blue and 1 red. If I shake the bag up at random and say, okay, before you bet on this game, bet $1,000 that you're gonna pull out a specific color crayon, and you get to pick what crayon you want to bet on. You want to bet on the blue or you want to bet on the red? Knowing that there's 2 blue crayons and 1 red crayon in the bag, and you are having $1,000 to bet, you give me the $1,000 to actually play. If you win, I give you back $2K. If you lose, I keep the $1K. Okay? Knowing that there's 2 blue crayons in the bag and 1 red crayon in the bag, you are putting your hand in there, pulling out 1 random crayon with your eyes closed. What crayon are you going to bet on to pull out that bag? Anybody in the chat can answer, or I would rather everybody in the chat answer, to be honest. But what crayon do you think you're going to pull out that bag if you put your hand in the bag and pull out a random crayon, knowing that it's 2 blue and 1 red? Fancy says blue. I have ADHD. Hold on. No, you're good. Okay, Fancy, why do you say blue, though? Why do you think blue? Why would you bet $1,000 you're going to pull out a blue one? Always one with more chances. Okay. You said there are 2 blue, 1 red. Okay, so you know the odds of you pulling out a blue is higher than it is pulling out a red, just because you know that there are more blue crayons in the bag. Perfect. That doesn't mean that sometimes you're going to bet on blue and you might pull out a red. But you just know, more often than not, based off of the odds, you should win more than you lose if you bet on the higher probability crayon color. Because the chances of you pulling out the right color is higher. Very self-explanatory. That way of playing that game is how I play the trading game. Okay? The market can either go one way, up or down. The market is either bullish or bearish. There's no ifs, ands, or buts about it. It's either bullish or bearish. So meaning it's only either blue crayon or red crayon. That's it. Okay? Understanding that each crayon represents a different time frame. So if my daily is bullish, that in my head I'm thinking blue crayon in the bag. If my 4 hour is bullish, I'm thinking blue crayon in the bag. If my 1 hour is bullish, or bearish, I'm thinking red crayon in the bag. Ideally, knowing that the daily is bullish, 4 hours bullish, and 1 hour is bearish, it will make more sense to take trades that support the buy bias rather than the sell bias, just because you know that the probability of you winning on the bias is already higher than the sells, just because you have more time frames telling you to buy rather than telling you to sell. Very fucking simple. And vice versa. If the daily is bearish, that's a red crayon in the bag. If the 4 hour is bullish, it's a blue crayon in the bag. If the 1 hour is bullish, it's blue crayon in the bag. Ideally, I'm still going to be looking for buys rather than sells, just because I know that the chances of me winning on the buys is already higher, because I have more time frames telling me to buy rather than telling me to sell. So understanding that, right? Then we get into the second part of the way I trade. If I'm good at picking the right direction of the market or being on the right side of the market, I'm overall going to win more often than I lose just because I'm going the right way. Okay. So if I take a trade and I lose and it still goes my way, that lets me know mentally that I was right about my direction of the market. My timing was just off. Meaning I entered at the wrong time. It was a low volume time. It was a bad entry, a bad execution. My stop loss was maybe too tight, anything like that. It's easy to fix those kind of losses because all you have to do is get better at timing. You already understand that you know where the market is going to go. You just got to be more precise on when it goes that direction. Versus keep trying to go back and forth or go against the overall way the market is intended to go. So that's basically how I trade. I establish a directional bias based off of however time frames tell me to buy versus to sell. I wait for price to get to certain levels, and then I enter that. I only look for trades that support that directional bias, and I enter at those levels with confirmations. And if I lose a trade and it still goes my way, I just know that my entry was just a little bit off. I was a little bit too aggressive, a little bit too early, a little bit premature. My stop loss was maybe too tight, things of that nature. If I take a trade that supports my directional bias and it goes against me and it stops me out and it overall reverses, I just know I got caught in a reversal. Very simple. That's how you weed out what you're doing right and what you're doing wrong by minimizing potential errors. I just got hold by gold, bro. What you was in on gold? After it meets your TP point, can you still bet on a new one? Yeah. That's how you scale in. That's when it comes to scaling in on positions. Meaning, after you pull out a blue crayon, you know now there's only one blue crayon and one red one in there. But again, as price is moving, the crayons may change. If the 4 hour goes from making new highs to making new lows, that lets you know that 4 hour not blue no more, it's now red. But you won't, it would never not change without you knowing. So it's not going to change in the bag where you don't know. It's going to change, and if it does change, I'm going to tell you're going to be able to see on the chart that this is no longer a blue crayon. This is now a red crayon. So even after you take a trade and you in a buy because you know the probability is to go higher, and it hits your TP, okay, you still have another game to play. If you want to play it again, you can still play it again, but it may not be the same crayons. It may be three. They may all be blue at this point. What do you trade? I trade Forex and futures and indices. So when it comes to indices, I trade US 30. When it comes to futures, I trade NASDAQ. When it comes to Forex, I trade gold, GJ, EJ, UJ, GU, EU, EJ, GBP, CHF, GBP, JPY, and AUD, USD. So anything you see to the right of this watch list, right over here, is everything that I actively trade. Hopefully that analogy makes sense with the crayons and how the crayons correlate to time frames and things of that nature. Can the same concept be applied into day trading options? Yes. The reason why I say that is because any asset that has Japanese candlesticks all have the same thing. Every options market has higher highs and higher lows. Every futures market have higher highs and higher lows. Every stock market have higher highs and higher lows. Every crypto market has higher highs and higher lows. Everything. All of them have higher highs and higher lows. So because my trading foundation is based off of pure higher highs and higher lows and understanding the directional bias of a market based off of its pivot points, I can trade anything because they all have it. So I can trade options if I wanted to. I can trade Forex. I can trade crypto. I can trade stocks. I can trade anything because they all have higher highs and higher lows. They all have Japanese candlesticks. And understanding that is how I've been able to be consistent trading. Like, I don't change my strategy when I'm trading something that's more volatile. Like how Fancy just said US 30 moves too fast for me. Like how fast the candlestick moves doesn't matter to me. All I do is just adjust my lot size. Very simple. If the moves are bigger, make your lot size smaller, or use less contracts. If the pair is less volatile, use more. But again, no matter what the contract size is, 1% is going to always be 1%. So 1% on a 10 pip move versus 1% on a 100 pip move is still going to be the same amount of money. Just your lot size will just look differently. Are you paper trading right now? No, I'm actually live trading. I just haven't took a trade yet. What trading strategy do you use? I trade support and resistance, but isn't that considered chasing? Is what considered chasing? I don't understand that. No, no. Oh, are you talking about to skill in? Are you talking about skilling in a position that you're already in? No, it's not considered chasing. The market is not closed. I trade the Forex market. The Forex market is open 24/5. So it's open 24 hours a day, 5 days a week, Monday through Friday. There are different sessions, times for the market, for the Forex market, that has different levels of volatility. So you can trade NASDAQ as on a Forex broker. So you don't have to trade NQ. NQ and NAS 100 is the same thing. So I would trade NAS 100 on a Forex platform. That way I could trade it during London session or Asian session or whatever session I want. But I don't know, LOL. I just heard you not supposed to be chasing. I'm still new, my bad. No, you shouldn't be chasing. Meaning so hypothetically, okay, here we go. I got a perfect example right over here. Yesterday, somebody in the chat came to ask me about US 30. All right, this was the US 30. They asked me about US 30 back here. But when they asked me, US 30 was like somewhere up here. I gave them my overall breakdown. I said, I like US 30 buys, but the move already started, so I can't get in it yet. I can't get in it because it already started. Because it was up here. I said, if I wanted to get in US 30, I would have had my entry based off my strategy would have been down here. But because the market already started moving in the direction that I would have intended to go and it's currently up here, I missed the trade. I didn't try to get in up here because I already expected it to go higher. My entry would have been down here, but because I missed it, I just didn't get in. So that's an example of not trading, not chasing. If I would have chased it and just gotten up here, knowing damn well that I should have gotten down here, that would be considered chasing because my entry is way off further from what I would have entered. And even though if I would have entered up here and price still went up, I still would have made money. But ideally, that is creating a bad habit because most of the time, chasing trades is not going to be, it's not a good quality to get. Why is chasing bad? Because if you're chasing the trade, you wasn't confident when it first came up into your head. Meaning, if you looking at buys or something, whatever, right? And you wanting to see the price go your direction before you get in. Now you're getting a worse entry at a higher price, meaning the risk to reward gets shortened and your stop loss gets bigger. So it kills your risk to reward, and not all of the time are you confident in your trade. That's why you didn't get in when you should have entered. So it's just a bad habit overall. Could you go on gold and tell me how it's looking for my POV? All right, gold. Where is it at? Right over here. So this is what I think about gold. Looking at the daily time frame, we are aggressively bullish. We are at all-time highs. Go to the 4-hour time frame, we are still bullish. How do I know? Because price created equal highs here, created a higher low and a new high. Looking at this market structure, you have a higher high, higher low, higher high. This lets me know that this overall price action is still bullish. This is just a retracement phase of overall bullish trend. Some people might look at this like a downtrend. No. In order for price to shift from bullish to bearish, it has to first take out the lowest point before making that new high. If this was the start of the push that made a new high, this is just a pullback of an overall bullish trend until price breaks and closes below this level. Then that lets you know that the buyers are no longer in control and the sellers are now regaining control. Okay? So the 4-hour is still bullish. Looking at the 1-hour time frame, the 1-hour time frame is bearish. Remember how I said before? In order for the price to go from bullish to bearish, it had to first take out the lowest point before making that new high. The 1-hour time frame has did that. How do I know? Because if we look at this price action here, we have a higher high, higher low, higher high. This was my high. How do I know? Because price broke above the previous high, creating this high here. Then price started to pivot down. Price pivoted down and then eventually took out this low, which is the lowest point before making that new high. And this is what signaled the reversal. Once you see price take this low, it gave you a retracement and then a continuation, giving you this price action: a lower low, lower high, lower low, lower high, lower low, lower high, lower low, equal highs, equal lows. Seeing these equal highs and equal lows back to back lets you know that price is now consolidating. So even though it's consolidating, it's still not breaking highs or making lows. So the 1-hour technically is bearish. So let me do a recap real quick. Daily is bullish at all-time highs. 4 hours bullish. We just made a new high. 1 hour is bearish. So in order for me to actively trade gold, I will need to see price either make a new high on a 1 hour time frame, transition it from bearish to bullish, meaning we go bullish if price breaks above this previous high to the left hand side, comes down and retest and continue. And if that does happen above here, that means the 4 hour will be bullish and the 1 hour will be bullish at the same exact time. Back to my crayon analogy, that would be three blue crayons in the back because the daily is already bullish, 4 hours bullish, and the 1 hour will just be going bullish. So I will bet on the buys every single time at this area. And then down here is where I would want to sell. Why? Because this is where the 4 hour goes bearish, meaning this is the most recent high. This is the highest point before creating that new high all the way up here. So in order for market to shift from bullish to bearish, it has to break that point. This is that active point right over here. So if price can break and close below this area on the 4 hour time frame, that lets me know that the 4 hour crayon is going from blue to red. And I see that in real time happening if we get this closure. Now, if price comes down here, give you a break and retest, that lets me know that the 4 hour candle is red. And the 4 hour crayon is red and the 1 hour crayon is red. And the daily candle crayon is still blue. Again, at that point, you would have more crayons telling you to sell rather than telling you to buy below this area. So I would like sells in this area to look to target these lows. But based off of where price is currently at, we created equal highs, never made a new high. We created equal lows, never made a new low. Lets me know that this is a range. This is a decision level. So price hasn't picked a clear direction just yet. Like I said before, I only take trades when the market has established a direction because I am a directional bias trader. I trade with the higher time frame direction. I use lower time frame for entries to be precise on that high time frame direction. If the market is at any given point in a area that is a decision level where it hasn't picked where it's going to go higher or lower based off where price is currently at, I just simply won't trade it. That's why I'm not focusing on gold today because it is in a decision area. This whole area is part of a decision. It's either going to go higher or lower. We don't know that until it actually breaks above and retest or breaks below and retest. How do you paper trade? I recommend people paper trade on. I recommend people. Fuck, I can't talk. I'm stuttering because I talk too fast. I recommend people paper trade on FX replay. The reason why I recommend people trade on FX replay is because it's like back testing, but in real time where you don't have to wait for the actual candlestick to close. When you wait for paper trade, when you are paper trading, you actually have to sit here and just wait for these hourly candle closes, 30-minute candle closes, 50-minute candle closes, wait for price to pull back to your level, things of that nature, right? You have to wait for the setup to come to you. It could take hours. You get more reps in at a faster pace when you're using FX replay. A lot of people might not know what FX replay is, so I'm going to give you an explanation on what I'm going to show you what FX replay is right now. What's up, Bree? Now let me show you what FX replay is. Go on the web browser, type in fxreplay.com, press enter, sign into an account. Once you create an account, it's free. Okay, why did I not just get signed in just now? Okay, there you go. Go to battles right over here. Press new battle, press casual. Okay, press new battle, press casual, press next. Make the account 100K just to make numbers a little bit easier. Keep changing the direction if you want to. Max participants 1 because I want to be by myself, and then put whatever it as that you want to trade. So I'm going to do NAS 100 because that's the most common on TikTok. Everybody on TikTok trades NAS 100. So we're just going to do NAS 100. Okay. Press next. Make your profit target 10%. Make your max daily drawdown 10%. Make it max drawdown 10%. Make it max daily drawdown 5%. Make it max risk per trade 1%. This is basically how the prop firm space run their prop firms. You have a profit target, max drawdown, daily drawdown, things of that nature. Press next, press create. It's going to put you in a random simulated price action, but this price action will be something that actually happened in real time. This price action is something that happened actually in real history, with NASDAQ. So it's not just a random simulated price. This is real price that actually happened. Okay. Once you get here, as you can see in the bottom right hand corner, you have an account balance, you have a realized P&L, you have an unrealized P&L. If I take a trade, it will show you my trade actually winning and losing. This is how you paper trade without paper trading. This is just back testing, but 10 times better. So I'm gonna simulate how I actually trade. I go on a daily time frame, establish a bias. I'm a fact checker those. I don't want to go into too much detail because I want to be here all day doing this. Okay. The day time frame is bearish. How do I know? Price just took this low right over here. So day time frame bearish. Go to the 4 hour time frame. Are we bearish or bullish? So I'm asking myself, we're bearish. How do I know? We took this low right over here. Go to 1 hour time frame. Are we bearish or bullish? The 1 hour is bearish. How do I know? We took this low right here and never took this high. So I want to take sells rather than taking buys because I have more time frame telling me to sell rather than telling me to buy. Very simple. I mark off my current low, meaning this is the current low right over here. This previous low being right over here. And my current lower high being this pivot point right over here. Very simple. I'm looking for sells. I can either sell if price break and retest at this area or price retest and reject this area. Looking at the bottom, you see is it say Wednesday 16 o'clock. That's 12. That's Wednesday 4 p.m. I'm gonna click down here, press New York time to make sure it's on the right exact time for the session I trade. And then I don't trade agent session. This is agent session. I don't trade agent. I'm gonna fast check until I get to New York, London session, because that's the session I actually trade. I'm gonna set this to 1 hour, make sure I'm on a 1 hour chart and press one candle at a time. So we're on 16. Let's get it to 1. 16, 17, 18, 19, 20, 21, 22, 23, 24, 1 a.m. So this should be 1 a.m. So why the fuck did that say 16? Oh, because I just changed the time zone. Rip, I just fucked that up. Whatever. But this is New York session, so I will be open to trade in New York as well. So we can actually do this on New York. I want to take sells down here or sells above here. I mean sells right here. Look at it on the 4 hour time frame. We're bullish, bearish. I don't want to buy according to the 4 hour until we go bullish above this area. But this is how I would trade. Let's play the candlesticks. Wait for price to get to my area of entry. So I would have sold below this area, but again, I don't want to trade inside this price action. In the real market, I'm not taking a sell because this range is too tight. I'd rather trade below this range. Give me a better range to fill. This is 4 a.m. So this is coming in. This is London session now. Got a break, got a retest. Let's wait for continuation. No continuation, no trade. Okay, we got a break in the closure below right over here. This is good. What time of day is this? This is in New York. I really don't want to trade this, but we're gonna do it just because. I got into the 5-minute time frame for entry. Wait, before I go to entry, let's go to 1 hour chart to look for targets. So look to the left hand side. We look to target these lows down here. And below this target, we can look to target these lows lower down here. Okay, let's go to the 5-minute for entry. Right click. Oh, not that. Right click, reset chart. Okay, here we go. Let's go to the 5-minute time frame for entry. What I want to see before I enter, I want to see price take this high and then take this low. I will set a sell stop below this low to target these lows all the way down here. Very simple. Let's change this to 5 minutes and play this candlestick and see what happens. So we took the high first. That's what I needed. Now that we took this high over here, I'm looking at the price action. We have a higher high, higher low, higher high. If we take this low right over here where the 5-minute decided to go bearish alongside the overall high time frames being bearish, I would like to take these sells. Now look to target the bottom of this range over here. So let's play. If we get a pullback, we get a sell. If we don't get a pullback, no sells. Okay, so no pullback, no trade here. This is how you avoid a loss. Meaning this break and retest was just a fake out. So I avoided taking a loss here. That's why it's important to wait for confirmations. Everybody, do we know each other, bro? Like in real life? It's yes, fancy. It has to take the high, then the low first. It has to take the high first to signal a reversal, and then take the low to go the direction of the high time frames. Let's continue. 1 hour time frame is still bearish, so we just getting a deeper retracement. See if we can reject off of this area. I do like this area as the rejection now that we created this clean track to the left hand side. So again, we took this high right over here. Now I'm looking at this low down here to get took. Let's see what time of the day is this. This is agent session. I don't trade agent session, so let's get back into London. This is still not London. Okay, we're in P London now. So we took the low, but again, it wasn't my session, so I would not have taken this trade. Now I'm looking for still sells, but now we took this low down here. I want to see if we get a closure back below this range. Let's go back to the 5-minute and play these candlesticks, waiting for closure below this level. Okay, we got a closure. I like this sell. We take a sell here, stop loss above these highs. Quarter 1 hour time frame, see how the stop loss look. Then you look to target the bottom of this range. Do much for the media. Let's round this to 3. And let's round this to this is about a 1-to-1 right over here, but our overall target will be all the way at these lows down here. Let's take this trade. Now I'm showing you how to take the trade. You click on the position, press place order. Everything will automatically be set to 1% risk. You press save. And now you can see it will say I'm actively in a position. That's how this trade works. And let's play to see how this trade plays out. And drawdown. Okay, stop loss got here. Let's see how this continuation looks. So was it because I was premature or too aggressive, or was it because I got caught in a reversal? Let's see. So it looks like I was premature, a little bit too aggressive. It comes down to re-break this low. I'm going to trade a second chance and adjust stop loss accordingly. Let's take the trade again. And I got filled again. So now I'm getting caught in this chop. Getting caught in the chop, being as though I lost in here in this price action twice. I don't want to trade this price action no more. It's overall consolidating. So let's wait for another setup. Let's look at the daily recap. Overall, still bearish, made a new low. Just my entry was premature. 4-hour time frame, still bearish, made a new low. 1-hour time frame is still bearish, but inside consolidation. I still want to sell overall. My entry was just premature. Let's see if we can break and retest this area down here. So yeah, this is just chop. We creating sideways price action. So no pullback, no breakdown here, no trade. Now our 4-hour shifting bullish. How I know? We have a lower low, lower high, lower low. Price broke above this high. Now we going back bullish. Looking at the 1-hour time frame, we're bullish above this area as well. We have a break. Let's wait for a retest. What time of the day is this? New York, 9:55. Let's see if we can get a retest. Retest, question mark, question mark. Okay, no, so it's just gonna go without giving me a retest. Okay, fuck it. Sometimes it's gonna happen. You're gonna mess it up sometimes because it just don't want to give you a retest. Like it happens. Let's go to the daily time frame again. Okay, now we're making new highs on the daily time frame. So now our daily is now shifting bullish. So our daily is shifting bullish above this area. 4 hours already bullish. 1 hour is bullish as well. We already got a break. Let's see if we can get a nice retest. Oh my god, this break was too fucking aggressive. So it never comes back. Hello? Okay, now we come back now. Let's come deeper. Okay, now I'm getting a retest. Go to the 1 hour time frame. See how this retest looks on the hourly. On the hourly, we are now bearish. I don't want to buy in the bearish market, so I need the 1 hour to shift bullish first. Where does that happen at? If price breaks above this high. If it doesn't break above that high, no trade. Oh wait, actually, now we got new levels here. Our newfound levels where we have a lower low, lower high, equal lows, a shift, and the continuation. This is a 1 hour reversal alongside the 4 hour already giving us a break and retest of this area right over here. If I measure the pullback from the lowest point to the highest point on this push, you can see we have a field level retracement. That's a 50% retracement to retest these highs up here. We got a break. Let's look for a retest on the 5-minute chart. Let's go to the 5 minutes. See how this plays out. Okay, we're taking this high right over here. I like this trade. Let's put T8 buy. Stop loss below our hourly candle, which would be this candle down here, where we place our stop loss below this hourly candle here. Then we can look to target the top of the range. Let's place order. Place order, save, see how this trade plays out. Let me go a little bit faster. I don't want to be here all day. And was I premature again? No way I was premature again, right? How much profit would this have been? This was a 1 to 3 risk reward. It's floated by the 1 to 1.8 risk reward in profit and then reverse. Actually, it didn't even reverse? Hello? It ran for about a 1 to 2.5 and then reverse. But in a nutshell, that's how you paper trade. Damn, you good, but you go so fast. No, I was definitely just fast tracking that because I really didn't feel like doing this. I was just trying to speed run it. But I just wanted to just show you how it looks in real time. But yeah, so instead of paper trading, like actually sitting here waiting for a price to actually fluctuate and get these levels and price to come down to your level and all that other shit, if you just go on FX replay and just replay like this, where you can just navigate it and you can fast track the candlesticks and the closes and things of that nature, you can get more trades in, more reps in, and track data like at a faster pace. It's like paper trading on crack. Good morning, Rosado. Welcome to the stream, bro. Can you zoom in on the break and retest? All right, my bad. I closed it already. Fuck, my bad, bro. You want me to do all that again, bro? You want to go slower this time? What time you wake up to trade? I wake up at 1 a.m. to trade. All right, so on AUDUSD, I'm waiting. Excuse me. I'm waiting for sales on AUD USD. We already got the break. I'm waiting for a retest now. So we got a break with this hourly candle closure below this level right over here, below this previous low to the left hand side. I'm waiting for a retest. Retest will be on a 5-minute time frame. So I'm just waiting for a price to come back into this area with higher highs and higher lows, and I will wait for a price to take this low to give me an entry. Top loss will be above these highs, and I'll look to target these lows down here. That's what I'm waiting for on AU. You're live trading now? Yeah. I just didn't take a trade yet because I'm waiting for my setup. Okay, the way I trade, everything has to happen in order. I need to see the structure. I need to see the direction. I need to see price get to my POI first, meaning my point of interest. Then I need to see it happen in detail of giving a retest with structure, then a shift in structure on that lower time frame to give me an entry. That'll also be above the highs. So half of the job is done. Like I got my direction down. I got the breakout down. I just needed the retest, and then I need the entry. If it give me a retest with no entry, then I just won't trade it. It's not letting me sell in FX replay. If you're not letting you sell in FX replay, then I gotta do all that again, bro. Let's go to one person. I'm gonna pull it up again. I'm fast tracking because I really don't feel like doing this. I would do a back testing session. Like I would do a whole FX replay live stream on a weekend. This weekend I would do one. So if you want to, that's something y'all interested in, I could do that on the weekend. But like I really don't feel like doing this. But if you're not letting you sell, make sure when you press your short position, you actually click on it. Like if I don't click on it, you don't see the bar here. If I click on it, you see where you could change the colors, the trash and all that stuff. If you don't click on it first, it's not gonna let you sell. So make sure you click on it, have this pop up. Once this pop up, you come up here to the top right, press place order. Then you just implement what you want to do, like your risk percentage, your risk amount, your lot size, entry price, like all of that should gonna be, all of this gonna save, default save to the numbers that's in here. So it's just gonna plug and play all of these numbers. So just press it, press place, then just press save, and it's gonna default set to all of this. And then you play the candlesticks, and then you're gonna see your P&L right here change. So $21 in drawdown, so on and so forth. Then they see right here, it will say you just hit a 1% gain. So I just made $100. So for options, it's the same, just opposite. You want to buy low and sell high. That whole buy low, sell high theory, I don't believe in. I just believe off pure market structure, right? If the market is bearish, you look for sells. If the market is bullish, you look for buys overall. That's it. Options are calls and puts. Calls for longing, market, puts for short market. Yeah. So for options, they just change the name. Instead of buys and sells, they call it calls and puts. Same shit though. But if the market is just high, you don't want to sell. You don't want to try to fade the highs. The whole buy low, sell high is flawed. It's right, but it's flawed. It's flawed because how many times are you going to buy low and it's going to keep going lower? Like, think about this. Price dropped from up here. This is considered a low because you broke below this low. And guess what? Price continued down. Again, people that's trying to buy here at this low, or when price came down to take this low, people that's buying here, it just went lower. You're just losing as it's going lower. So you got to combine buying low and selling high with the actual strategy and order flow of the market. So you want to buy low if the buys are setting up for a reversal, or buys are starting to regain control, meaning selling momentum is dying out. Then you want to buy low. But you don't want to just buy low because it's the low of the market. Same thing for highs. I know I was looking at NAS 100 yesterday, and somebody in chat came and said sells, shorts on NAS 100. I'm like, bro, why would you want to short this all-time high? It doesn't make sense. I think it was like back here or something. And I'm like, bro, why would you want to short that? Like, it's clearly bullish as fuck. No way you want to short that, right? But that's going to the buy low, sell high theory. You see it's super high, so you want to sell it now. In reality, you just want to go with the flow of the market. If the market is continuing higher or showing you continuation patterns, then you want to look for continuations. If the market is showing reversal patterns, then you want to look for reversals. Shout out to all the new followers we got this stream, bro. And I got a lot of engagement this stream and yesterday's stream, to be honest. That's lit. Hey Bree, I actually did. If you know me earlier, because I know somebody named Bree that was asking me, like in real life, that was asking me for my TikTok, and I wouldn't tell him and shit. So I low-key got scared when you said, when I see your name Bree, you said Tradeaholic. Did you see the question? What question? Is there a way you know if it will chop before enter? Yes, yes and no. You'll know it will chop before you enter based off of previous price action to your left. If you look to the left, because the market repeats itself, right? This is quote unquote an algorithm, right? This price history repeats itself. Stuff that it did to the left, most likely it's going to do it again. So if you want to know if the market is going to chop, just look at previous price action to the left. So as you can see right here, price was a little bit slow, barcode here. So guess what we have? A little slow barcode move here. Again, we got a clean move here, clean move up. So I'm anticipating that this move down could be clean as well. So far, it's looking pretty clean, not really barcoded. Again, you got a clean move down here. So the move up should mirror this clean move down. Very clean. So if you just look left, if it's chopping to the left, it's probably going to chop again. I'm trying to give you an example. Okay, we got chopping this right over here. Okay, let me do this a little bit better. We got chopping this inside this price action here. Overall, we got chopping this above here. So we chopped over here to the left. Price broke out of this chop, came all the way down, came back up, chopped some more. But when price broke back above inside this chop, it was pretty choppy here. So guess what? The move's not going to be as clean. That's all you. So to figure out where it's going to chop at, you just look to the left and see where price previously chopped at, and you could just, it's a safe bet to know that it might chop there again. Again, back over here. Price was choppy in this area. Price broke above it. It had some equal highs right here, reverse. Now this time it didn't chop. It was clean because it wasn't mirroring this move. It wasn't mirroring this move here. It was mirroring this move here. So that's why this push down was just as clean as this push up versus it being choppy here. Hopefully that answers your question though. Zoom into chop. Can't see an example. All right. Let's go back to those examples all the way back over here, to be honest. Where was those examples just at? But that wasn't here. Wait, I don't fucking remember, bro. All right, but let's look at it right here. If you've seen this kind of price action right over here, what do you think? Buys or sells? Just focusing on this kind of price action. Like it's choppy. You don't know. We're in between this overall range. So to figure out if price is going to range again, we're at current price. Just look to the left. So looking at this range here, if I look more to the left, it's probably going to have more range in the same area. So this is pretty clean. Let's look more left. Again, more chop. When the moves are clean to the left of current price, then it's probably going to be clean again at current price. But if it's choppy to the left, it's probably going to be choppy at current price. You got some chop up here. It's not the worst chop. Like this is a pretty decent chop, not that bad. But as you can see, when price came back into that area, meaning we left the chop right over here, started the chop down here. Once we came back up into previous chop, we started the chop again. Yeah, that's just happens sometimes. Like every thing is not going to be perfect. Like sometimes, again, consolidation got to start at some point. Just like every chop is not going to repeat itself. Like how we had like some chop right over here. We had some chop right over here. Then over here, it got clean. Like every chop is not going to repeat itself either. Just like every clean move is going to repeat itself. So every clean move might have some chop in there when the next time it comes in that area. And every chop might have some clean moves when it comes in that area. It's, again, about probability. The odds of it chopping again is a lot higher than it is just to get bled through. All right, I can turn it down. What platform do you trade on? I trade on TradeLocker and I trade on CoinX. But again, it's a game of probability, right? It's not going to happen. It's not 100% going to chop every time you see it chop or to the left. It's not going to 100% clean, go fill it up cleanly once looking to the left once price get to the area again. But the odds of it chopping again once it gets to the same area is a lot higher than it is to then vice versa. You recommend Robinhood? Yes, I recommend Robinhood for stock or crypto trading. It's very beginner friendly and it's regulated, so you should be good. But just because you got a good platform don't mean you're going to be making money, to be honest. Sorry to break it to you, buddy. I'm on Weibo Thoughts. Weibo is cool as well. Again, it's personal preference. How about options? I don't trade options. Robinhood is good for beginner friendly and as well. Well, dang, I was vibing. I guess everyone earns differently. Nah, yeah, I guess it's cool though. I ain't tripping. Sometimes when I'm talking, I don't even hear the music, to be honest. You do futures, so I trade Nasdaq, but not under futures broker. I trade Nasdaq under a Forex broker. So instead of trading NQ, I trade NAS 100, but it's both. They both are Nasdaq. So if I go to NAS 100 right over here and just clear the chart, if you look at this price action, if I pull up NQ, it will look the exact same. So this price action looks the exact same as NAS 100. See this price action? I have a higher high, higher low, higher high. I go to NAS 100, the same exact price action, higher high, higher low, higher high. So instead of trading NQ, I trade NAS 100, but they both are Nasdaq. And I trade under a Forex broker and not necessarily a futures broker. And same thing with MNQ. So if people don't know, MNQ, NQ, and NAS 100 are all the same thing. If I pull up MNQ, this price section, higher high, higher low, higher high. I pull up NAS 100, it looks the exact same way. And the difference will be, the difference in the price action will be the same. The price will be different. So as you can see on NAS 100, you see 24.4K. If I pull up NQ, it's going to be 24.7K or something like that. Yeah, 24.6K. So it's like a $200 off in difference, but the price action looks exactly the same. So you shorting? No, I'm not shorting yet. I'm looking for shorts on AUDUSD, just not shorting yet. Oh, so we gotta pull back that we wanted. We gotta actually retest. Now that we got our actual retest, I want to look at the structure that happened on this retest on this 5-minute chart where I see a higher high, higher low, higher high. So now I would like shorts back below this low. If we could take this low, I would like to take this sell, to be honest. I'm not in shorts yet. If price come back down and close below this, price come back down and break this current hourly wick, we can look to take some sells and have stop loss above this current previous hourly high for about 13 pips. I don't do random number stop loss. I like my stop loss to end in a 5 or a 0. So instead of 13, I will round it up to 15. My stop loss is always ending in a 5 or a 0. I don't like random number stop losses. And then we can look to target the bottom of this range down here, and then look to maybe manage some risk at this level right over here because this is a previous rejection area. Want me to zoom in on the retest? Sure. So what I'm looking for is price to tap into this gray box. As you can see, we're actively in it right now. I consider that a retest. As long as it touches there, it don't got to retest the whole entire box. It don't got to come to the high of the box. As long as it tap into it, then we're good to go for the retest. And I'm looking at the structure on this retest where we have a higher high, higher low, and now we have a new high. So if price could break this higher low, signaling that the 5 minutes now shifted into bearish structure, alongside the overall higher time frames being bearish, I will want to take sales here. Retest is on this current candle. Where my mouse is right now is the retest. This current candle tapping this box, this rectangle. Now drew this rectangle based off of the hourly time frame having these wick projections. So this retest is just simply, this candle is simply retesting these previous wicks. This was wicks to the downside. Now I'm anticipating that we could wick this area to the upside, then go bearish. And I'm using a 5-minute time frame to get more precision. What are your thoughts on KOD? What is KOD? Thanks for the heart meet, Brie. Hey, Brie, how long you been trading? Are you new to trading, or are you a little seasoned? Hey, Fancy Nancy, did you understand that? Do you have Instagram? Yes, I do have Instagram. I'm not really active on Instagram, to be honest. But I think my Instagram is Traderholic Reels. What you trading? I'm waiting to take some AU sales. Not in the trade yet. I'm waiting to take some sales. We're going to annotate on this line here, text potential sales here. I think my Instagram should be Traderholic Reels. This is AUDUSD. This is the Forex market. So this is the Australian dollar versus the US dollar. I'm anticipating that it loses value. thought it closes at night. So the first market doesn't close at night. The first market is traded 24/5. So Monday through Friday from 5 p.m. From 5 p.m. Friday, not Friday, from 5 p.m. Sunday to 5 p.m. Friday, the market is open. So when it comes to Forex. And I'm currently trading the London session. Been trading since 2018, but all over the place. So you should be pretty seasoned, like about understanding like what I'm saying. Repeat the Instagram, Tradeaholic Reels. I could type it. That should be it. Wait, let me see if I can pull it up. Okay, I can't pull it up. Good breakdowns. Thanks, bro. So if price break over a single low or swing, it's considered a market switch. But okay, let's watch this video. Go to my YouTube channel, shorts. Where is it? Where is it? I'm looking for. There we go. All right, wait. Hold on. This is me trying to talk slow. I hate listening to myself talk slow because I naturally talk fast. Hey, bro, chill, bro. Hey, Fancy, yeah, this is talking slow, bro. All right, let's watch part two. .25 speed, bro. That's fucking crazy. I don't talk that fast, bro. Wait, why that shit blinking? I didn't even know that was like that, bro. What the fuck? Am I tripping? like what? Bro, I did not know that was happening. I uploaded this? No, no way I did that, right? Oh, I was talking too much. Let me read. All right, hopefully that made sense, bro. But yeah, so to determine whether the market shift from bullish structure to bearish structure, it has to first take out the lowest point that created that new high. So in this example, this is my high, this is my high low, this is my new high. So I want to go find the bottom of that move that created that new high, which would be all the way down here, and wait for this to get taken out. If this gets taken out, that lets me know that lets me know that sellers are regaining control specifically on this time frame, and that I should be looking for sales. Sometimes if it breaks a lower low, it'll still go bullish. That's called a fake out. You can't avoid it. It happens. But again, trading is a game of probability. So more often than not, if it breaks a low, it's probably going to make a new low. If it breaks a low and goes higher, it was just a fake out. And you just can't avoid it. You're not gonna win every trade. It's just a part of the game. Look at this massive candle. Good thing I didn't just sell. That's why it's important to wait for confirmations after a retest. Because with this retest, if I would have just sold here, I would be an unnecessary drawdown. That's why I like when price to retest, I need to see it slow down in volume, give me some kind of reversal, and then continue to take a low, then I'll enter. Other than that, if the retest is too aggressive, it's probably going to be a fake out, and that's how you avoid the fake out. If I go to the hourly time frame, now it just looks like a fake out, where we have a low, a new low, and now we're coming back up. You just said something about coming back up. This is how you try to avoid fake outs. I still get faked out from time to time, but this is how I try to avoid fake outs, by being a little bit more patient, waiting to see if price slows down on my retest, then give me some kind of reversal and then enter. But because the retest was so aggressive after making a new low, this lets me know that this is probably going to be a fake out, and that's why I didn't take the trade just yet, and I'm still waiting to see what happens. What do you do here? I'm new to trading. This is where I mark off my chart and decide whether I want to buy or sell, and actively decide what I want to trade. If you're new to trading, for anybody that's new to trading and doesn't understand anything when it comes to market structure and things of that nature, go on YouTube and watch this video. I don't know why I opened a new tab, like I don't just got one right here. FX Alex G Ultimate Beginner's Guide to Forex. This video right over here. This is a 4-hour long video. You don't gotta watch the whole video in its entirety, from start to finish in one sitting. Space it out if you need to. If your attention span is not that long, you can watch it 1 hour. Take a break, watch another hour. Take a break, watch another hour. So on and so forth. Inside this 4-hour video, not going to teach you how to become a day trader, right? Don't think you're about to watch this video and just start making hundreds of dollars like it's nothing. It's not what this video is going to teach you. This video is going to teach you everything beginner friendly. So for the people that don't understand from what I'm saying, based off of like you just not understanding the language or the terminologies, like when I say break of a high or break of a low or things of that nature, watch this video and this will teach you the vocabulary of a trader. It's important to understand the vocabulary. That way you can understand what you're being taught. If you don't understand the language, then how would you know what you're being taught? You got to understand the language first, meaning understand the vocabulary. He's going to tell you what trading is, and everything learned in this video is universal across all forms of trading, not just Forex. Even though it says Forex trading, I'm letting you know in advance, this is more than just Forex. They just switched the words. So instead of saying buys and sells, you would say calls and puts for options or stocks, or you would say longs and shorts for futures. Like they just changed the words. They all mean the same fucking shit though. Okay. But understanding the language is important. That way you can understand what you're being taught. He's going to go over what is trading. He's going to go over trading view, this is what I'm charting on right now, which is called trading view. He's going to go over trading view. He's going to go over Fibonacci retracement and drawing on the chart. So he's going to go over how to use the rectangle tool, how to draw support and resistance levels, things of that nature. So very, very, very beginner friendly. He's going to go over position size calculator, meaning how do you calculate risk? How do you know how much money is worth per pip on that specific asset? I use a position size calculator as well, but he's going to go over how to calculate risk. That way you know how much you're going to lose if stop loss get hit, or how much you're going to make if TP gets hit. So that's important when it comes to risk management. He's going to go over Forex Factory. That's where you understand the economic news and what's going on versus what's red folder, what's green folder, things of that nature. I mean, yellow folder. Is it that nature? That because that is what affects price. That affects price a lot, actually. He's going to go over MetaTrader 4 and MetaTrader 5. You don't really need that part because nobody, that's really outdated. Nobody uses MetaTrader 4 or MetaTrader 5 anymore. For futures, most people use Tradeovate. For Forex, most people use Trade Locker. For options, most people use Robinhood and Webull. And stocks. He's going to go over price action, understanding what price action is and market sentiment. That's just knowing the direction of the market, whether you're in buyer's control or seller's control. Fundamental analysis, that's more so economic basis and war, food shortages, things of that nature. Trading of goods, tariffs. He's going to go over trend, how to identify a bullish trend versus the bearish trend, similar to what I did in short form, but he's going to go into a little more detail. Understanding a consolidation as well. He's going to go over candlesticks, meaning the open, the close, the body, and the wick of candlesticks. Like everything simply beginner friendly. Super beginner friendly. Indicators, you don't really need indicators. As you can see on my chart, I have no indicators here. I may use 50 EMA from time to time, but for the most part, no indicators. He's going to go over Fibonacci retracement. I said it already. Back testing. So instead of back testing, you can just use FX replay. He's going to go over what is a pip. And for futures, they call it points. Forex, we call it pips. Same fucking shit. Things of that nature. Trading sessions, meaning London session, New York session, Asian session. What pairs you should trade in each session if you want to trade multiple sessions. But I recommend everybody trade one session. That way you can build some consistency and knowing what you're doing right versus what you're doing wrong instead of trading at random point in times, and build a routine around your session. He's going to go over what is leverage, basically how you use leverage to make money in Forex, and some trading psychology. Really. So this is a 4-hour long video, very, very, very beginner friendly to the people that don't know nothing or that's very, very new. Within the first month or 2 months, everything learned in this video is going to correlate to overall, just not just the first market, but for the futures, stocks, and options, and crypto market as well. So I recommend everybody watch this video. This video came out a year ago. I was 3 years in trading when this video came out, and I still watched the video. I understand everything in this video, and I still watched it just to see if it's something that I didn't understand. So even if you don't, even if you are seasoned, I recommend you watch this video as well. Still, just fast track it. How much money have you made on your best trade? You don't have to answer if you don't want to. So when I teach people, I don't talk in dollar amount. I talk in percentage gains because I don't want people to get an idea of my results and expect them to get them same kind of result. Also, it's important to trick your psychology because trading is 95% psychology, right? So if you know that trading is more so mentally tough rather than it is physically tough with the know-how when it comes to technical analysis, it is important that you train your brain to think differently as a trader. So don't look at the dollar amount. Think of trading as percentage. If I tell you I made $1,000 on a single trade, right? You may look at that like it's a lot of money. But $1,000 is not a lot of money to somebody that's trading with 100K of capital, 200 or 300K of capital. Not a lot of money. That's like $1 to somebody's $100. Okay, it's really nothing. If you focus on getting good at making a steady percentage gain and learning the skill, the money is going to come over time as you get better as a trader. Okay. I target 5% a month, right? 5% a month seems like a little bit, but it's a lot when you have more money to trade with. 5% a month of 100K is 5K. 5% a month of 300K is 15K. Okay. So 5% is a lot if you have a lot more money to trade with. So to answer your question, the most amount, what was your question? How much money have you made on your best trade? I'm not going to tell you how much money I made on my best trade. I will tell you in percentage. The most money I made, my best trade, I made 7% on one single trade. And 7% could be whatever you think it is. It could be 7% of $100, $7. 7% of $1,000, $70, 70%, 7% of 10K, 700, right? Just know I made my best trade with 7%, and you could correlate that to whatever account size account that you have. So if you're trading with a $100 account, 7%, $7. Just do the math. How did you deal with losses? Not being emotionally attached to the trade. You deal with losses by accepting the loss before you even get it. Facts. Manage risk, stop trading for the day, come back tomorrow. It's easier said than done. You just gotta do it though, huh? Nah, it's not easier said than done. Have a plan. The reason why you can't deal with losses is because you don't know how to lose. Profitable traders aren't profitable traders because they make a lot of money in one single trade or one good week. They know when to cut their losses short. They know how to accept the losses, and they know when to walk away and come back. In order to deal with losses, you got to first accept the loss. When you take a trade, you should be okay with accepting the worst case scenario. Worst case scenario, you take a trade and hit stop loss. That's the worst case scenario. You hit stop loss. You got to expect the worst case scenario every given trade you take, because every trade you take has the opportunity, has the chance to lose, because it's a game of probability. Just because everything looks good at A+ setup and it's like an 80% chance you're going to win this trade doesn't mean this time you're taking it right now, it doesn't fall in that 20%. In every 10 trades, there is a win rate. In every 10 trades for 80% win rate, there are 2 losses. They don't tell you when those 2 losses are going to occur. Them 2 losses could be the first 2 trades, and you can win the next 8 in a row and still have that same 80%. Them 2 losses could be in the last 2 trades and win the first 8 and still have that 80%. Right? So you got to go into every trade expecting that worst case scenario, if I lose the trade, I am okay with it. If you are okay with it, then the losses will never affect you. I place my trade that I planned, close my computer, come back tomorrow. Yeah, and again, if you want to get better with taking losses, stop scalping. Literally. When you place a trade and you go about your day, you fuck around, forget you in the trade. You probably went to the gym, ate, went on a date, went to go hoop. Feel me? You probably did everything. And then you get back to the crib. You like, oh shit, I was in the trade before I left, right? Let me see how that played out. Shit like that. So if you can't take a loss, it's probably because you scalp and you over risk. If you stop scalping, then losses won't affect you because you don't even know you lost to the end of the day anyway. yeah, Bree. You don't even know you lost to the next day. Yeah, but that's a lot of risk, and it's more a nuance. I'm learning. I'm sorry. So does that mean if I put 10K on a trade and I'm assuming it goes up 7%? It wouldn't be 10K on the trade. It would be 10K on your account balance, because I don't risk my whole account per trade. So if I have a 10K account and I risk 1%, that's risking $100 on that single trade. If I risk $100 and I make 700, that is a 7% gain. And so I'm not saying I risk 10K to make 700. I risk 100 and made 700 when it comes to percent. Can you show me how to spot fair value gap? I can't accurately show you how to spot fair value gaps because I don't particularly trade fair value gaps. But fair value gaps, basically, in a nutshell, is just a 3 candlestick pattern where you have 3 consecutive candlesticks where the highest wick of the first candlestick doesn't meet the lowest wick of the last candlestick. So in this case, a fair value gap would be the highest wick in this candle and then in the lowest wick to that third candle. So it would be 1. Let me zoom in so you can actually see. It would be 1, 2, 3 candles. The highest wick in that first candle to the lowest wick of the last candle. So highest wick to lowest wick, and that will be a gap, meaning the gap is just the fact that these wicks don't meet. But that's the theory behind fair value gaps. But me personally, I don't trade fair value gaps. I just trade support resistance because it's a lot easier to understand. That's what I started with. Now I watch it to enter. Once I enter, I let it go. Yeah, that's good. That's what I do. I risk a certain percentage and walk away. I lose more when I stay. Yeah, as you get better as a trader though, and you can sit here and watch the trade go to stop loss and not give a fuck. I'm gonna try that because I'm an amazing trader. I just can't stand to lose. Yeah, that's okay though. That's okay. You just got to get better at taking losses, right? I'm like that too. I don't like to lose. I'm naturally competitor. I play video games. I play competitive video games like that. I play Fortnite. I play Call of Duty. When I play Call of Duty, I play rank play. When I play Fortnite, I play rank play. Not 2K. I play 2K as well. I play 2K. I play in the ante up. Ante up is like gambling, but for 2K. Okay. I play basketball in real life. I'm competitive. I'm a natural competitor. I don't like losing either. I lose when I lose in the hooping, I'm getting mad and I'm raging at all my teammates and I'm like, yo, run that shit back. Like that's me. I don't like to lose either, but you just gotta detach yourself from the emotion of losing and just like it's a cost. It comes with the game. Like you're not gonna win every single trade, so you can't avoid losing. So why get mad at it? Why get mad at stuff you can't change? Trade right. Second guessing is a drawdown. Second guessing drawdown, moving my stop loss. Yeah, I don't like that's all that's all stuff a lot of beginner traders struggle with. I struggled with that as well when I was beginner. Because nobody want to see the account in the red. You expect every trade you take to just go straight in profit. Like, but again, that's not the reality of trading. Let's look at this gold trade. I was in a gold trade for I think like a day and a half, maybe 2 days, and literally the whole fucking trade I was in drawdown. Like you don't understand what it's like to sit through a trade and watch 14 hours of your shit being red. Like it's crazy. I got the trade right here though. I'm gonna scroll back to where I took it. Okay, right here. This was the trade right over here. I took a trade back over here, anticipating this be a break and retest at this area. We got a break and retest. I entered back over here. That loss was above this hourly candle. I just gave it some breathing room. This is the hourly candle. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. 29 hours of fucking drawdown. I mean, every time I checked my phone throughout the day, that shit was red. Like, literally. And I didn't say, fuck it, let me close early. Let me just cut the trade short. Let me cut my loss short. When I took the trade, I said, I'm okay with losing this dollar amount. That is okay with me. So if it get hit, so be it. And this trade ended up running for a 1 to 4 risk to reward. And I did get a scaling position right over here, taking this trade again at a different day as we got this break and retest right over here. Got a break and retest with a bullish fake out. Price came down, closed back inside the range. I took the sell stop loss above the overall highs. I looked to target these same lows. This trade ended up running for a 1 to 1 risk reward where I decided to partial out and then in reverse, meaning this was a break even trade. But the trade before that hit for a 1 to 4, almost a 1 to 5 risk reward. So, like I said, as you get better and once you accept the risk, like, okay, this is the risk. I'm risking $100 on this trade, or I'm risking $500 or $1,000 on this trade. Once you accept the risk, you just gotta let the trade do the do. It's either stop loss or TP. There's no in betweens. Well, there's in betweens in TP when it comes to take partials at your first TP and partial at the second TP, things of that nature. But I partial at my first TP. But until price hit my first TP, there is no in betweens. Do you sort of swing? No. I hold trades from average. It normally take me about an hour to hit my first TP. So seeing this much, I'm like, damn. Like, I didn't plan to be in this long ass fucking trade. But it's either stop loss or TP. That's it. Once I take it, I accept the risk. And however long it takes, that's how long it takes. I didn't purposefully hold this long ass fucking trade at all. So you sort of swing it. No, I don't swing. So wait, so that's with the 10K. If I'm risking 100, I don't understand. So the 10K is just how much is in your trading account. Not in your, so if I make a deposit in Robinhood and I deposit 10K, just keep it to 10K. And I place a buy on one of the options or whatever, a call for one of the options, right? And I have a stop loss. That means if stop loss is just an area, price will automatically allocate you out for a loss without losing all your money. It just ties into managing your risk. That way you don't blow your whole account inside one single trade. Okay, so if I have 10K in my account and I place a trade and I say, okay, if this trade goes $100 in drawdown, I want to be out of this trade in full and just take my minus 100 loss. That way I still have an account to trade with and take future trades instead of having to do a redeposit or things of that nature. So that's just what that is. Stop loss just means you risking inside your 10K. You want to grow your 10K. The 10K is there to increase, to let you be able to set a certain lot size or a certain contract size, things of that nature. So The more money you have in the account balance, the higher the lot size you can use. So you can't try to get a 1K trade on a $100 account. It doesn't work like that. If you want to hit a trade that hits for 1K, you need the actual capital to sustain that kind of drawdown or that kind of profit to have that kind of lot size or contract size. Okay. So with that being said, the 10K is there to let you know that this is what's in your account. This is what you have to trade. If you wanted to risk the whole thing, you totally could, but I don't recommend that. It's important to have proper risk management. That way you don't blow all your money on one single trade and you still make money over time. It's about growing the account, not necessarily flipping 10K to the 100K or 10K to a fucking million. We're going to get consistent gains on a consistent basis in small percentage. And over time, over a month or 3 months, that 10K would have doubled if you targeted 10% a month or whatever. That 10K will go from 10K to about 13K with 30% gain. In 3 months. Make it 10% a month, that's 30%. In 3 months, that's 10K to 13K. And so on and so forth. So risking $100 just basically means if this trade loses, I'm okay with losing $100. And if this trade wins, I'm looking to make 200 or I'm looking to make 300 or 400. That way you're looking to make more money than you put in that risk. Hopefully I explained that well. So we got our retest on AUD USD and on NZD USD. AUD USD looks like a fake out though. NZD USD looks a little bit more clean just because we're not significantly above the level. So we're going to focus on this instead of AU. And we're getting our closure on GBP-CHF that we wanted as well. So I wanted to see an hourly candle close below this level first, and then they retest. So this hourly candle closes in the next 18 minutes. I'm going to get up here at 4 o'clock though. This price does close below this level in the next 18 minutes. But in the meantime, we're going to focus on NZD USD and to see if we can get a market structure. Okay, NZD USD looks shit. Never mind. Looks shit. Even though we got a retest, this retest doesn't have structure. I need my retest to have some kind of highs and lows forming before I take a structure shift to go bearish. If the retest is too aggressive with no structure, then I just won't take it. Now, how do I get started? Go on YouTube, type in FX Alex G, Ultimate Beginner's Guide to Forex, and watch that video. It's a 4-hour long video. Just go ahead and watch. This video is going to teach you how to become a day trader, tell you the fundamentals and the basics and understanding the words and terminologies that we use every day. Once you understand the words and the vocabulary of a trader, it's important to watch people that live trade. You could watch me, you could watch other people. I don't care if you watch other people. Like, I'm not going to say and tell you to only watch me, right? Because I got the holy grail. Like, that's not the reality of trading. Watch other people, watch me, watch who everyone. It's important to watch people that trade live because live will get you the real raw reaction. This is what the video look like. Okay. Be this video right over here. It's important to watch people that live trade because live trading gives you the real raw reality of trading. You get to see that person take wins. You get to see how they manage their emotions. Get to see if that person is a person that experiences FOMO. You get to see if that person is greedy. You get to see if that person is consistent. You get to see how many trades they're taking during that session. You get to see all of that stuff. Rather than just watching the video. You watch a video, watching somebody trading the video, they're going to show you their highlights. It's like watching the highlight mixtape, right? You watch somebody basketball highlights, you're going to think that, you're going to watch Stephen Curry highlights, you're going to think he's the best point guard in the motherfucking world. Because everything he do in the highlight reel is going to be good. But you don't see the shots that he missed because nobody's going to put the missed shots in the highlight tape. Same thing with YouTube videos. With YouTube videos, again, everybody's going to point, they're going to post the highlights. They're not going to post the downside to actual trading because it's not going to attract as much attention. Things of that nature. So it's important to watch people that live trade. That way you can get the raw reality of trading and not just the highlight tape on YouTube video or YouTube TikTok short. Yeah, if it's so much, bro, just watch that 4-hour long video that I just said and just break it down in sections. And you will that video is going to talk about risk management, and you will understand how the 10K to 100 to 100 works. So yeah, go back to this video, watch this video. This video, they're going to talk about leverage. and how to use leverage to be able to trade with more money with only $100. So how to get access to trading bigger lot sizes with $100. So that ties into leverage. That's a whole nother topic. So if you think the 10K and 100 is confusing, wait till you hear about leverage. So but watch this video. Now TGRSM, bro, just made 400K on FOMC. Yeah. So again, it's perspective, right? 400K to you may seem like a fuck ton of money, but to somebody that's like TGR, 400K is nothing, right? So it's a game of perspective. That's what margin accounts. Nah, leverage is just mean. Okay, I'm gonna use the word leverage in real estate as in reference. In real estate, if I buy a house for, I'm just gonna use small numbers, even though it's not realistic. If I buy a house for 20K, right, and then I put 5K in maintenance into that house, meaning I put 25K into the house, buying the house and the maintenance. Now that house is now worth 50K, right? I can take a 50K loan from the bank on that house, even though I didn't put that house, even though I didn't put 50K into that house and refinance the house, or like, because that house has 50K in equity after I did the fucking, what's it called? The modifications. I bought the house, I fixed it up. I bought a rundown house, I fixed it up, and now I spent 25K on it. Now it's worth 50K. I could take a loan out from the bank that's equal to the equity that house is worth when it comes to marketing it, selling it, or find whatever the case I want to do with the house. Okay, that's how leverage works. So for everyone, depending on what your leverage is, if you have a 1 to 100 leverage or 1 to 300 leverage or things of that nature, that just means for every $1 in your account, the broker will spot you $100 of buying power. Meaning, for every $1, it will spot you $100 of buying power. Meaning, just lot size, not actually giving you $100, but just of buying power. So if you, for every $1, you get $100 of buying power with a 1 to 100 leverage or $100 account, you would have a $10,000 buying power when it comes to lot size. So the bigger leverage you have, the more buying power you get to get, meaning you get to have more lot sizes or contract sizes. But the downside to that is the higher lot sizes you're able to use, the faster you lose that $100 if you start losing. You can make money fast, but you can lose a lot of money faster if you don't know what you're doing. So that's how leverage works. Are you currently trading right now? So yeah, I am trading. I'm sitting here looking at the charts, waiting for entry. Didn't quite get an entry yet, so I haven't taken a trade yet. So part of trading is just not, you're not going to always be in a trade. Sometimes you're going to come to the chart and look for a trade, and if the opportunity doesn't present itself, you don't take a trade. This is what is going for me. I was looking to take sales down here. Price never came down here to give me my sales, so I just didn't take a trade. I'm not going to try to force a trade. I'm just going to only take what my setup allows. Other than that, I do nothing. Because at the end of the day, I don't want to put my money behind something that I don't know is already proven to be profitable. So based off of the way I trade my strategy, I've been making money for the past 2.5 years with the way I trade. So with this same strategy, if it does, I'm going to implement it. I'm not going to deviate from it. Just because I feel like I need to be in a trade. Like, it's going to be times where you come to the charts and don't take a trade at all. I'm about to get off in the next like 5 minutes though. Thank you for all the followers. We got 41 new followers. I think this is the most followers we ever got in one single stream. For any new people in the chat that don't know me, I live stream on YouTube as well, not just TikTok. So if you go on my YouTube channel and look here, as you see, I'm actively live right now. And if anything I said during this whole entire live stream that I said it too fast, whatever the case may be, that you want to revisit or just rewatch the whole entire live stream, you could just go to my YouTube channel, click on the live, and you can see all of my past broadcasts all the way down here. I've been broadcasting for about 3 years now, live streaming for about 3 years now. I've been trading for about 5 years. If I scroll all the way down here, you can see that we go pretty deep where it says 3 years ago. So it's 3 years ago all the way down here. All right. But for this specific live stream, this whole live stream will be posted on YouTube because I'm already live on YouTube. It will save just like yesterday's did and the day before that one did and the 2 days ago one did. Right. Yeah, so if you want to revisit any topic that I talked about during this, just go to the live stream and just like rewind it or fast forward it, play it in 225 speed if you need to, because I talk too fast, right? But yeah, I also have a Discord as well. I have a free Discord community to anybody that wants to join the Discord. Oh shit, I forgot I was in the call. Hey KD, nigga probably sleep, bro. I also have a free Discord community. If anybody want to join my Discord community, send me a message on TikTok and I will send you the link to join the Discord community. If any beginner in here that want to do a one-on-one call, or intermediate, or it could be an advanced that want to do a one-on-one coaching call with me, I will be doing one-on-one. I do one-on-one coaching calls on Saturdays and Sundays. I pick one random person from the Discord community for free. You don't got to pay me nothing because I don't sell any services. So I'll pick one person from the Discord. I will send a poll in the Discord like I will send a poll in the general chat like this. Traderholic poll: who wants the free one-on-one session? You vote me, and I will pick a random person inside that poll that voted me, and I will send you a message on Discord and say what will be a good time for you, Saturday or Sunday, to do a one-on-one coaching call. One-on-one coaching call will last about an hour to 2 hours. We will go over everything in detail when it comes to my trading plan, my risk management plan, how do I take losses, how do I deal with win streaks, how do I deal with losing streaks, my psychology, how do I stay mentally tough, my overall in detail trading plan from start to finish when it comes to trading strategy, psychology, risk management, and journaling. Everything, every aspect of trading that we would discuss inside that trading call. And then after that call, that following week, like, so say we do a call Saturday, on that Monday, I will give you a homework lesson. So basically saying like, during this week, I want you to focus on this aspect of trading. Focus on good risk management and only risk this month per trade, or focus on identifying your good structure levels or whatever. I will give you a call, but I will give you homework based off of what we discussed and what I figured you struggle with the most. Okay, I will highlight that and I will tell you, focus on this for this next week. And then in that following week, I will check up on you to say, how did you do with this? And I want to make sure you journal every trade, and we will go over some of the trades that you took that following week, that previous week. I do that on Saturdays for free in my Discord community. I post a poll, vote who want to be in one-on-one coaching call. If you say me, you'll get randomly picked. And I pick people based off of who has the most engagement and active the most, or seem like that's taking it more serious inside the TikTok and YouTube lives. If I see a name pop up and you asking questions and you're engaging in things of that nature consistently, then your chances of you getting picked inside that one-on-one will be a lot higher versus somebody that's not really there all the time. Can you explain order blocks to me? I don't necessarily trade order blocks. You don't need order blocks to trade. It just depends on what strategy you want to learn. But order blocks are basically just supply and demand levels. The idea behind order blocks is the first green candle before a bearish chop that takes a market structure shift. So a market structure shift just simply means if price is making higher highs and higher lows, once price shift in direction, meaning price takes out the most recent high low before making a new high, which would be this price point here, you will find the first blue candle before this aggressive drop that takes this low, and that will be a level of supply. Vice versa for demand. For demand levels, it will be a bearish market, and you will want to see price take out this previous lower high to show that we are reversing from bearish to bullish, and it will be the first red candle before a series of blue candle that takes out a previous higher low, and that will be a level of demand. To show you on the actual chart, it will be this part. Okay, we can look here. We have a structure shift here where we went from bullish to bearish as price took this low right over here. The first blue candle before a bearish push will be a level of supply. So this will be a supply level, and vice versa for demand. As you can see, price went bullish above this area down here. This was the first bearish candle before you have a aggressive push to the upside. Again, this will be a level of demand. As you see, price give you breaker structure, came back down to retest it, and then it continued up to retest this high over here. So that's what it is. But I don't trade that specifically. So that's just my interpretation of it. If you want more detail about supply and demand or order blocks, I recommend you watch this guy right over here. This is a buddy of mine that trades supply and demand, that also live trades. His name is Luca No Limit. He trades supply and demand. This guy right over here. This is a buddy of mine. He trades supply and demand. If you want, I mean, that's, yeah, he trades supply and demand, which is also order blocks. If you want a deep, like another example from somebody that actually trades it, watch this dude right over here. I'm staying here for about 5 more minutes and I'm off. I'm gonna get off at 4 o'clock because the market just look like it's not going to give me entry. Oh wait, I lied. It's coming back down. Okay, so in order for me to take a trade on NZDUSD, I want to see this high get retook. If this high get retook and then come down and takes this low, I'll be open to taking the trade. But if it just continued down here, I don't really want to take this because this is not a higher low yet. I need a confirmed higher low. Technically, we do have a higher high right over here. And our confirmed higher low will be all the way down here, right? Because this is the most recent low before making a new high, meaning this is the new high because we took this high right over here. So, but selling all the way down here kills my risk to reward potential because my stop loss has to be in the area that invalidates my price action. So based off of this current high, if I have to have a stop loss all the way up here, this is a negative risk to reward and I'm not open to taking this. So in order for me to get in this on this setup, I need a higher low to form first. So in order for high low to form first, price has to find a level of support, come back up, re-break its high, and then I'll look to take this short instead. That way I'm still having a good risk to reward on this kind of setup. Like so. But if it just continues down without me, so be it. Like every trade is not going to give you an entry. If it doesn't give me my entry and meet my criteria to a T, I just won't take it. I'm running the TJR strategy that good. Every strategy is good. Just depends on your level of comprehension and how you can retain the information you're being taught by TJR. And if he is a good teacher towards you when it comes to how you comprehend what he's saying. There is no one strategy that works. There's no strategy that's better than others. I personally think it just depends on the individual that's learning the strategy. So I'm not going to tell you TJR strategy doesn't work or does work. For me personally, I don't know his strategy because I never watched his bootcamp or anything like that. I never watched any of his content. But he makes money trading, so I'm gonna tell you it works. It's good. Hey, do you use prop firms? Yes, I use prop firms and live capital. For the prop firms I trade with Top One Trader and I trade with Alpha Trader. And for my personal account, I use CoinX for my brokerage. Something about it. CoinX is this right over here. That's what CoinX look like. But about the Discord earlier, if anybody was joining Discord, send me a message on TikTok. I will send a link to the Discord. Very simple. Did I tell you no good at eating alone? Yeah, taking 2 minutes. I'm here for the next 2 minutes, bro. Well, not 2 minutes. 1 hour, 1 minute and 30 seconds until I get off. Wait, who are the platforms again? They trade Forex. Yes. Top One Trader and Alpha Trader. So Top One Trader. This is one, and Alpha Trader. This is another. This is what they look like. Both of them are Forex. They both have future platforms as well. I think Top One has a future platform. If you trade futures, it's just called Top One Futures. So yeah, they do have a futures platform as well with Top One if you want to trade futures, and so does Alpha Trader. Okay, alphafutures.com. Here we go. So they both have for futures. If you want to trade futures, they also have Forex platforms as well, both within the same company. Yeah. Top One actually offer instant funding where there's no eval phase or anything like that to where you have to prove you know what you're doing. You go straight into the straight funding process. but there is a lot harder to get a payout with them, with the instant funding, because the rules are a lot more strict. If you're somebody that can't follow rules or is not really good, there's no point in getting instant funding. But in reality, if you're not really good, you're not good at following your own rules in the first place, you shouldn't be buying a prop firm account anyways. But I think for top one instant funding Forex challenge, like you could get like a 25K instant funding account where there's no eval phase and get a payout. If you get a 20% consistency, trade for 30 days, and not breach the account with max drawdown, daily drawdown. I think the max drawdown is like 10% or 6%. Daily drawdown maybe like 3%, something like that. As long as you don't breach the daily drawdown, the max drawdown, and you get inside the 20% consistency rule, you could get a payout in 30 days. Or you could pay a little bit extra on the instant funded account and get the payout within 14 days. Where with no eval phase or no phase 1 and phase 2. In fact, did you do the interview with top one to get a payout? No. How much money do you recommend a month I should make to become a full-time day trader? You could become a full-time day trader depending on what your lifestyle look like. I don't know what your monthly expenses look like. If you got a Corvette C8 and you making 3K a month trading, I don't recommend you go full-time trading because your car note is going to be that fucking C8. So depends on what your personal life look like, right? If you could afford it, then go for it, right? But make sure before you go full-time day trading, you have at least 6 months of bills and expenses saved up to cover you whenever you have those losing months, because you will have losing months and losing weeks, and your bills won't stop coming in. So make sure you have that coverage. That way you don't get behind in bills whenever you experiencing drawdown as a trader. I think I had one losing month this year, and my losing month I had was in April. April I got cooked. When I say I got cooked, I was down like 5% in April or 3%. No, it was 5%. 5%. April I lost 5% net. So I didn't lose the whole week. Like I was trading the whole week, the whole month. I was having wins, having losses, but by the end of the month, I was 5% in drawdown from my starting balance. But I recovered that in June. I've recovered some of it in May, but in June I made about 13%. So I recovered a lot of it and some. Facts. Oh, I read it already. All right, it's 402. I'm gonna wrap it up here. Thanks for all the new follows and all the new engagement. If y'all new, make sure I hit that follow button. I will go live stream. I'll live stream every day through a learning session for about 2 hours. I did 3 hours today, so it was kind of crazy. I got a free Discord community. If you want to join the free Discord, send me a message on TikTok. I will send you the link. No problem, Dean. If you want to join the free Discord community, send me a message on TikTok. I will send you a link. Also go live on YouTube as well. Search Trailholic FX on YouTube. If you want to rewatch this whole entire live stream from start to finish, that's totally up to you. If you want to hear something that I reset. Other than that, if you want to do one-on-one coaching with me for free, again, I don't sell any kind of services. Just doing the Discord, and I do them on weekends for one random person in the Discord. Other than that, can't think about missing anything. I think I'm good, bro. It's your boy Trailholic Chat, and I'm out. Peace.